this unfolding, from November onwards, you will see that we will be putting in some new products and new variants, which will hopefully drive further share acquisition.
Last question, Mr. Sharma, from my side, largely on exports, because we've seen another 18% growth in this particular month, and if you see the momentum since May actually has been very positive, 25, 22, 18 and 20% over the last 4 months, going backwards to May 25. Largely, are you seeing broad-based growth essentially in LATAM as well as Africa? And if you can provide some update on how Nigeria has done in this particular month?
Yes, we are seeing more or less broad-based growth in the industry. We monitor very, very closely the top 30 countries, which account for more than 80% of our sales. And I would say more than 80% of the industry are the 100 odd countries that we operate in. And most of these countries are in growth path. LATAM region has led the growth. What is more beneficial to us, besides this whole thing about the rising tide lifting all boats, is the fact that we have got great competitive positions in places like LATAM. We have had our highest ever sales in LATAM in Q2. And that's a reflection of not just the market growing, the industry growing, but also our competitive position in it. So we expect the same tempo to continue into Q3 also. And hopefully we should be able to improve our sales numbers in Q3. Nigeria has been sort of now steady at about, for us, retails of about 19, 20, 21,000 units per month. It's of course a far cry from the 50,000 units which we were doing. But you can see that we are now challenging getting to 185 plus, moving towards the 200,000 number, even with Nigeria almost half of what it was. So that gives you a sort of indication as to how well we are doing in some of the other markets. Nigeria's return to much high levels, it's I would say a gradual process, because the economy had got quite battered because of the devaluation, etc. But it is at least steadied. The exchange rate has steadied, and sometimes the exchange rate the Naira is actually appreciating. So at least some kind of equilibrium has come, and hopefully this will be the beginning of a climb back into better days for Nigeria.
Ruchit, among the two-wheeler auto OEMs, which would be your top pick here? Which is that stock which is technically looking quite sound on the charts and could see an upside from current levels?
So Hero MotoCorp within the two-wheeler space looks quite positive on the charts. We have recently seen a good run-up move from 4,400 to 5,400, almost an up move of 1,000 points. But then last 1 month, the stock price is consolidated within a range. Now, the good thing was that during the price up moves, the volumes were good. And whenever the small bit of minor corrections are there, we are not now witnessing any volume-based selling happening in this stock. Even the stock price is not giving a closing below 20-day exponential moving average support. So this clearly indicates a good buying interest and a relative outperformance compared to other stocks such as Bajaj Auto in Hero MotoCorp. So I think Hero should be preferred. A gradual up move towards 6,000 could be expected in Hero MotoCorp. So it should be roughly around 8 to 9% up move from current levels can be expected.
I think Samit, I'm going to come in over here. Hero Moto is the sound bet that he's given, but I think we should talk to Puneet about what is not so sound about the four-wheeler space, because everyone is talking about the way it's beat estimates in the month of September. What is not sound about the four-wheeler space now?
I think it's interesting that in this month we were penciling in the likes of Mahindra and Maruti to be the key stocks which will outperform, but that actually hasn't been the case. We've seen players like Tata Motors amongst others which have actually been the most, in terms of outperformance. You can see that on your screen right now, 47% growth, and it's much higher than 3 to 10% what we've seen on the other players. Now, this does include some form of inventory filling for the next month. and that likely seems to be the case. But nevertheless, the growth is very strong for players like Tata Motors in this space. So we spoke also to Maruti's management yesterday. They mentioned that they have seen some kind of shortage essentially in transportation of all vehicles in time. And that's one of the key cases of the growth being largely a little subdued than what the expectation was of about 200,000 in terms of sales. So that's definitely one of them. But Ruchit, let me come to you also on a very quick question on Maruti Suzuki, because it has seen that run up ever since 15th of August and seeing some kind of slight dip from those levels now. Do you feel that on the fundamental side at least they seem to be taking care of the sales aspect? Anything on the chart that suggests some positive momentum for Maruti in the near term?
Yeah, so minor pullbacks could be there, but we believe that whatever correction would come and because the stock has already rallied from the 13,000 to 16,500 almost. So those corrections would be more of a part of an uptrend only. So clearly a buy and dip strategy should be kept for stocks such as Maruti. Major support should coming around 15,200 to 15,000 range. So in case if we get any such dips towards that range, the risk reward ratio could become favorable to take counter trades over there. So whatever correction even today we are witnessing, this is not a volume based selling which is happening, but just because of that overbought setup, suppose the recent run up, I think it's just a dip within an uptrend. So let it come near the support, then one should look for taking some counter trades and buying opportunities there.
Okay, so that's the auto pack that we're talking about right now, but we'll quickly slip into a short break. Please stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing room in a segment heard on Street with Samit Sarkar.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है यार।
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है यार।
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV
Welcome back. You're watching India Market Close on NDTV Profit. Let's welcome in our technical guest Kunal Shah, Senior Derivative and Technical Analyst at Mirae Asset Sharekhan. Kunal, if you look at the markets, the Nifty has continued to remain sideways in trade today, while the Nifty Bank Index that is up around 170 odd points in trade. What are your key strategies when it comes to both these indices, that is Nifty and Nifty Bank?
Good afternoon. Good afternoon to everyone. See, I think definitely what we have seen post the RBI policy, we have seen the momentum coming back, specifically in the Bank Nifty index. Bank Nifty, which was the underperformer, has started to now outperform, which is a positive sign for the market. We are seeing Bank Nifty trading above the key short-term moving averages, indicating there has been a change in the trend. And the immediate resistance for Bank Nifty is at 56,000. And once that is taken out decisively on a closing basis, you will see the short covering move coming in the Bank Nifty index towards the mark of 57,000, 57,400 on the higher end. So for Bank Nifty, we are bullish on the indices. The lower end support for the indices stands at 55,000, which is a very strong support zone. So any dips should be a buying opportunity. 56,000 is the immediate target where we expect Bank Nifty to go. And once we get a strong closing above that, probably we'll see the big short covering move coming in towards 57,000 on the higher end. Coming back to Nifty here, Nifty has been consolidating in today's trading session. Nifty is still trading below the short-term moving averages of 20-day, and we expect that to break out on the upside around the mark of 25,000. And once that is taken out in the next week, we expect further short covering to come in Nifty as well. That would clear the way for Nifty to a 25,350, 400 mark. So we are bullish on both the indices. The approach should be on the buy side. Nifty, the critical support on the downside is now placed at 24,700. Till the time this is not taken out, the view remains bullish on Nifty.
View remains bullish on both Nifty and Nifty Bank. But what would be your stock-specific ideas?
I think the first, there will be two ideas. Both are on the buy side. First is the defense space. I think defense has again started to gain a strong momentum. And out of here, the top pick would be HAL. The recent correction, what we had seen in HAL, the stock after the correction consolidated at a 200-day moving average, didn't break it, tried to break it a couple of times, but couldn't. We saw strong buying interest from those levels. Then we saw a sharp rally, and on technicals, what we count as the Elliott wave, it is now has started the third wave, which is the fastest one. So that is where we expect HAL to continue its momentum on the upside. We have even pitched this stocks to our client in today's trading session for a positional buy. So we are bullish on the stock with the stop loss of 4,700, looking for targets of 5,000 to 5,100 in the very short term. So HAL is a buy for me at the current levels. Second is metals. Today, metal index again is continuing the positive momentum. and we expect the index to go towards the mark of 11,000, currently trading around 10,300. So metals should be in focus. APL Apollo would be a pick over here. Clean consolidation breakout, what we have seen in the chart, volume-based buying, and we expect this momentum to continue on the higher end. So 1739, 1740 is where it is trading currently. One can go long with a stop loss of 1700, looking for targets of 1790 to 1820 on the upside.
Moving on, pure play refiners, that is MRPL and Chennai Petro. Both the stocks are buzzing in trade. In fact, MRPL is up around 7% while Chennai Petro is up around 3.5% in trade. Now, one of the reasons why both these counters have been buzzing in trade is the fact that post the Ukrainian strike that has happened on Russian refineries, if you look at the Russian refinery output, that has come down by around 0.4 million barrels. Now, this is around 0.5% of the total refinery production in the world. Because of this drop in the refinery production, the gross refining margins for Indian refiners, that has increased to around $7.5 per barrel. Now, analysts were estimating this number to be anywhere around $6 to $6.5 per barrel. Because of this increase in the refining margin, the earnings expectations have also improved for specifically for pure play refiners like MRPL and Chennai Petro. Now, with every $1 per barrel rise, when we look at the GRMs for MRPL and Chennai Petro, that benefits the EBITDA by around 24 to 36 odd percent. The higher beneficiary here is Chennai Petro, while MRPL stands to benefit by around 24 odd percent. So this potential increase in the gross refining margin, which could translate into higher EBITDA for this pure play refiners going forward, is something that has led to this increase when it comes to both these counters, that is MRPL and Chennai Petro. Kunal, coming to you on both these counters, how are you looking at MRPL and Chennai Petro? Can the positive momentum sustain for both these counters?
I think definitely looking very strong on the technical chart. Specifically, if you look at Chennai Petro, in the last 10 days when the markets were volatile, we were seeing the correction phase going on. Chennai Petro has been one stock which was consolidating at the higher level. So clearly there was something into the stock and as we spoke out, we expect this momentum to continue on the higher end for Chennai Petro, and this consolidation will be broken out on the upside, and there is a gap area which it needs to be filled, which is around the mark of 860. So currently trading at 780. One can initiate long. The risk to reward ratio is favorable, keeping a stop loss of 740 on the downside, looking for targets of 840 for Chennai Petro.
Okay, so that's with regards to a few of the names. Chennai Petro trading near the day's highest levels. Let's pull up a few of the paper names. You know, the buzz is continued on these ones: JK Paper, Andhra Paper, West Coast Paper, and Orient Paper. All of these counters seeing some smart moves today. JK Paper up almost 9% in trade. Kunal, any momentum play that you see? Because during the week, couple of days ago as well, we did see that rally that came in terms of paper stocks. Right now, the buzz is price hikes. That's a fundamental perspective. But what are charts indicating?
Definitely, charts are again inclined towards the fundamental side as well, where we saw a breakout in the stock in today's trading session. So for JK Paper specifically, if I talk about 415, 416 has been the strong rejection zone. 3 times the stock has rejected from that zone, and today we have seen a breakout above that level, sustaining above that and above average volumes as well. So clearly we are seeing this momentum is likely to continue on the higher end for the paper sector, and JK Paper specifically, you can expect the stock to go towards 480, 490 in the very short term.
Got the view, Kunal, but time for some more buzzing stocks. V-Mart Retail, Sai Silk and Nuvama are actually in focus. Varsha is joining and to give us some key details on all these top movers. Varsha, over to you.
Well, thank you so much for that. The first 2 stocks actually are buzzing on the back of Q2 business update that the company has given, starting with V-Mart Retail, wherein if you see the revenue was up 22% year on year, while the same store sales growth was up almost 11%, and they're going to open 25 new stores, wherein the total new stores will be at 533. Next on the list is Sai Silk Kalamandir, wherein a good show when it comes to Q2, because Q2 being a lean quarter for them. So revenue was up 28%, and they're planning to expand their store presence with 10 new openings. Lastly, you have Nuvama Wealth, wherein they've got approval from SEBI, wherein company will set up Nuvama Mutual Fund, and they're allowed to launch schemes under the MF, including those in the SIF category. So these are the 3 stocks which are buzzing on the back of news.
Okay, these are interesting names. Thank you so much for that, Varsha. You know, what comes to my list over here is, or to my mind, Puneet, is it the festive season or is it the GST cuts which are aiding someone who's selling saris or someone who's in the retail space? I mean, that's the conversation we should be having as well, because a 20% up move coming in on a Sai Silks summit, pretty strong, right?
But I believe for apparels that were worth about 2,500, there was no GST cut. So it is purely festive, I believe.
So festive season it is. Kunal, again, any momentum play that you're seeing, because 19-20% upside on a Sai Silks, I know it's going to be difficult for an investor to get that opportunity to get into it as well, but what would you recommend?
I think for Sai Silk, what we have seen that earlier on the technical charts, 200 had been the strong rejection zone, where at least 4 to 5 times the stock has seen a rejection. But what we have seen from the lower levels now, that whatever dips you are getting into the stock, that has been bought into aggressively. So clear cut, once that 200 mark is taken out, we will see the strong up move coming in. So overall, the view is positive on the stock. Buy on dips. Already the stock is up by 18%. So dips to be utilized as a buying opportunity. Short-term target should be around that 195-200 zone. And once that is taken out, then one can go for positional buy. Even the stock can go towards 260-280 mark.
Got the view, Kunal. But Kunal, also on something like a Nuvama, if we can have your view, because when the whole GST saga happened, we saw that correction and a fall from 8 to 9,000 levels from Nuvama to the current ones. Any momentum coming back in this counter? Do the charts indicate any kind of positive rally in the near term?
I think definitely the correction what we had seen in the recent times, there were low top, low bottom formation. So clearly there was a downtrend, which has been reversed in the last 2 trading sessions. But we still need further confirmation into the stock to clear the trend. The resistance for the stock is exactly at 6,800 mark, and that is where we've faced rejection even in today's trading session. So probably you will get a dip on the downside towards the support zone of 6,300, 400, and if that is sustained or we see any reversals from those levels, that will clear that the trend has been changing from bearish to bullish, and then one can look for a high top, high bottom confirmation on the technical charts.
Right. Max Healthcare is the next stock that we'll be discussing, because the stock is a top loser on the Nifty 50. It's down over 5% in trade. Let's get in Varsha with the bull and the bear scenario for Max Healthcare.
Well, thank you so much for that. Yes, the stock is under pressure, but let's highlight some of the good things and bad things for Max Life. Let's start with the bull case, wherein for FY26 they're going to expand their bed capacity to 1,500 new beds, which will drive new growth, future growth for the company. But delays from regulatory approvals is one of the risks that the company faces. Onto the bull side, if I were to talk about the oncology segment, which is a high margin segment, contributes 25 to 26% to the overall revenue, and company is expecting to rise this contribution. But complex mix like increasing revenue from international patients, though it's good for ARPOB, average revenue per occupied bed, but margins may compress because of the higher cost that the company may have. Onto the international revenue, if I were to talk about, rather increase in the occupied beds and ARPOB, that is average revenue per occupied bed, is a good thing. Rather, it creates demand for the company. But the acquisition integration issues in Noida is one of the risks that the company faces. While onto the international revenue, which was up 32% for Q1 on better marketing that the company did. So good thing on the international revenue, but the geopolitical reasons may hurt their international portfolio going ahead. While lastly, if you see, company is doing a lot of capex. Well, they aspire that the net debt to EBITDA remain below 1x, but still 3,700 beds over the next 2 to 3 years. This may put pressure on the balance sheet for the company. Lastly, if you see that digital business is growing well, but rising NCR competition may hurt margins for the company. So overall, yes, company is doing a lot of greenfield, rather a lot of brownfield projects, which will help to grow company, but there are some issues like geopolitical reasons, and of course margins may take a hit on the back of rising international patients that the company has.
Okay, thanks Varsha for that. In fact, let's also get in Neeraj Diwan. market expert. And before we go to him, let's just quickly address what's happening with the markets. Let's pull up Nifty 50, look at Bank Nifty as well, because that's where the action is. A mild recovery on Nifty 50. Now we're at the day's highest levels, though just a 40 points up move from day's low. It's an interesting move that we're watching out for. What's leading these gains is going to be interesting. Bank Nifty as well. 0.5% up move on that front, 255 points. So I think it's a 450, 500 points recovery on a Bank Nifty as well. And let's look at the PSU Bank Index, because the dichotomy that has been existing between the private banking space and the PSU banking space is interesting. PSU Bank Index seeing gains of 1%, but still it's come off the day's highs. If you can just have the contributors of Nifty 50 to see which stock is leading to this kind of an up move. Bharti Airtel, Axis Bank, Kotak Mahindra Bank, Tata Steel are the ones which are contributing. What is putting pressure is the Reliance Industries, Max Healthcare, ICICI Bank, as well as a Maruti. So that's with regards to where markets go. But Neeraj, welcome to the show. Let me come to you. A recovery that's come in terms of where markets are concerned right now. But one stock that I want to talk about is a Max Healthcare, the top loser on Nifty 50. My colleague just got to us the bull and the bear case scenario. How are you looking at it? Would you be a bull or a bear for a Max?
Yeah, good afternoon. Actually, for these healthcare stocks, especially hospital stocks, we've seen a good move happening in the last 3-4 years. I would rather avoid it for the time being, because I think on valuation front, I feel it's a little stretched right now. So maybe if it corrects more, I would be a bias, but not at the current range.
So that's with regards to where the hospital stocks go. Apart from that, one other counter, or I would say a space that is buzzing in trade right now, is even the metal pack. Neeraj, any views that you have with regards to metals? Because last couple of trading sessions have been really strong. The base metal prices, in fact, are moving as well. Would you be a buyer at current levels? Maybe it's a short-term cycle.
I'm positive on metals, and especially the non-ferrous part. And they've recently done very well, whether you see the likes of Hindustan Zinc, Vedanta, Hindustan Copper, they've all run up a lot. So there may be some small correction, consolidation, which may happen around these levels. That's always possible. But I think that the trend is positive for these stocks. So any consolidation or small correction should be an entry level for these stocks. So I remain positive on this space, and more so with the non-ferrous part.
Got the view, Neeraj, but at this particular point of time, we put focus on some key stocks that Somit is picking up in our Heard of the Streets segment, and he's with us anyway today as well. But Somit, what are some of the key ones that we need to watch out for?
Well, if you look at the market action, Nifty is largely sideways, not much of flows that we are seeing in trade. Nifty Bank is something that has been interesting, and in fact that is one index that has been holding the Nifty as well on the higher side. But when it comes to stock specific, dealers have indicated few names. Firstly, to start off with, Glenmark Pharma is what dealers are saying. Now there are strong buy flows on FI desk in this counter, so keep an eye out for Glenmark Pharma. For Kalyan Jewellers, in the last 1 month, we had seen intense selling pressure on this counter, but now dealers are indicating that selling pressure is largely over for Kalyan Jewellers, and we could see a bounce back on this counter. When it comes to IIFL Finance, dealers are indicating that there are buy flows on large HNI and PMS desk in trade today. For Bandhan Bank and SRF, dealers are indicating that there are buy flows on large HNI desks for both these counters. For Bandhan Bank, they're expecting the Q2 update to be on the stronger side, and for SRF, they're expecting the second quarter earnings to show a significant growth compared to what we had seen last year. But for Bandhan Bank, do remember that the stock might enter the F&O ban in trade today. And lastly, when it comes to Torrent Power, there are buy flows on FI desk. Dealers are indicating that delivery volumes could be on the higher side for Torrent Power in trade today.
Interesting names. In fact, with the Kalyan Jewellers, you have a PN Gadgil also, which has just reported their sales numbers. The stock also seeing some smart gains, 2.5% up move. They've registered a 65% growth during the festive season is what they've indicated. And the gold segment, a 64% up move on volume growth of around 10%. So clearly this is telling you that this is a price driven uptick that we are seeing, and it's not a volume driven uptick. So that is what we need to take into consideration as well. In fact, let's take a quick question in terms of what should one do with all of these jewelers also in trade. Kunal, a quick one. Kalyan Jewellers, PN Gadgil, Titan, ahead of the festive season. Would you be a buyer?
I think definitely the stock has witnessed correction from the lower levels, and we see Titan could be a good pick from the current levels. Already on the technical charts, we are seeing a double bottom around the mark of 3,300. The immediate hurdle for the stock is at around the 3,500 mark, but once that is taken out, you expect that short covering move to come in, and the stock can go toward 3,600. So I think Titan could be a good buy from the current levels with a stop of 3,350, looking for targets of 3,600 on the upside.
3,600 is the target price for a Titan. But moving on, Avantel, let's pull up that counter on the screens and see what the stock is doing in trade, because strong moves that did come in. Stock is at the day's highest levels with gains of 12% coming in there. They have inaugurated a 76,000 square feet facility in Hyderabad and looking to invest around 56 odd crores. This will be for radar systems. Siddharth Aburi, director at Avantel, joins us on NDTV Profit exclusively. Siddharth, welcome to the show and always a pleasure to speak to you on NDTV Profit. If you could help us understand firstly the new facility that you have inaugurated in Hyderabad, 56 crores is the investment for radar systems. What would this mean for the company in terms of revenues and the kind of timelines that you're looking at from operationalization perspective?
Good afternoon, ma'am, and Jai Hind, and it's an honor to be on your show. Just a quick, it's a state-of-the-art facility that we have inaugurated in Hyderabad in a center which is called Electronics City. And it actually houses a multidisciplinary approach where we are doubling down on our strengths that we have in providing and our commitment to indigenization and being self-reliant on various different technologies for the Indian Defense Forces. Not just on the radar sector side, we are also focused on software-defined radios and satellite communication systems. And also we have a state-of-the-art satellite AIT facility at this location, which we have inaugurated yesterday. So it's a multidisciplinary, multi-technology based on the needs and requirements of our end customers.
Siddharth, after this order win, where does your order book lie? What is your current order book and what is the revenue visibility that you're seeing?
So again, in defense, it's very hard to give you proper numbers in terms of what it would look like. But we are working on key technologies that are of immediate requirements to the Indian Defense Forces, working on multiple different RFPs. The current order book is, I think, which is also known to the public, around 250 crores.
Siddharth, I was asking what is your current order book? Not how much you're looking to generate from this land parcel or the new facility that you have inaugurated. What is your overall order book is what I wanted to know.
So overall order book as of Q1 is around 200 plus crores.
And what is the execution time period for this?
It depends, probably 1 to 2 years.
And how are you looking at the order inflow for the rest of this financial year? For how many orders are you in the L1 category currently?
Being a listed company, I will not be able to comment exactly on when and how many orders I'm going to get, but I'm quite bullish on quite a few opportunities that we are working towards.
Right. I obviously understand you won't be able to tell me in how many orders you're L1, but at least you can tell me for how what is the total worth of the orders for what you have placed bids?
Good enough. Big numbers.
Plus 500 crore plus?
I cannot disclose that at this point in time.
Okay.
Siddharth, it's Puneet this side. Thanks so much for joining in. When I look at, in terms of growth in revenue and between FY25 and 24, it has been slightly subdued. Going into FY26, what are the expectations? Because you mentioned that you have about 200 crores in terms of order book that is executed over the next 1 to 2 years. How much do you expect essentially in terms of showing growth for FY26, and do you expect that largely you will be able to maintain the 35 to 38% margin profile that you have been over the last couple of years?
So again, from a growth trajectory standpoint, over the last few years, we have seen very good, tremendous growth for Avantel. And what we have disclosed as well in our AGM meeting is that This is a period where we have again focused on working towards new innovations, new technologies like software-defined radios, and like ma'am rightly said, we are working on multiple different radar projects, and we are also quite bullish on our new satellite satcom equipments in other various form factors and various bands as well. All put together, we are working with various different customers. So we are quite bullish, and in parallel, we are also focused in investing on non-defense as well. So I think, as the market knows, we have invested in our medical equipment. It's a fully owned subsidiary of ours. So we are interested in medtech. We're also setting up good manufacturing facilities for antennas and EMF facilities coming up with big SMT lines. We're also trying to get into solar a little bit. So all in all, we're trying to see we can diversify and have a stock.
Siddharth, you know, strategy is diversification, I agree, but which is it that is going to really work for an Avantel? Because you're actually looking at multiple aspects right now, that's one. And two, with the recent rights issue that you did for around 80 odd crores, where is it going to be spent in terms of building the business?
Good. So the rights issue that we have done was primarily for a new facility which is going to come up next year in Vijayawada. That is going to be for solar and antenna manufacturing and for EMF. We're also coming up with ground station as a service, first in the country, to provide ground station as service solutions for the global constellations of satellites for data download and data reception. So that is where our diversification money from the rights issue is going. But over the last 2 years, we have been investing our R&D efforts and internal funds on key technologies which are a must and a requirement for the Indian defense, as primarily around communications and radars.
Right, Siddharth, thank you for joining us and giving us the growth path for Avantel going forward. Moving on, the second stock that should be in focus today is Sammaan Capital. Now, Abu Dhabi-based IHC will be infusing close to 8,850 crore rupees in the company. However, this fund infusion is happening at a rate which is much lower compared to what the current market price is, and that's the reason why we are seeing such kind of a downtick when it comes to Sammaan Capital. But we also spoke to Gagan Banga, the MD and CEO of the company. Let's listen into that bite.
The strategy is to, over the next 12 to 18 months, get the company into a format where the lowest hanging fruit for us is to stop breaking the asset up into legacy and growth, right? Whatever assets have to be unbound will get unbound. What we are left with as of end of fiscal 27 is all the right kind of asset which we want to grow. That's point number one. Point number two is that over the next 12 to 18 months, I would imagine within about 6 months of the approval coming, we should be operating at a interest cost which is at least 150 basis points on our debt lower than where it is today. These are two significant milestones to achieve. As an outcome of these two, we will get to the third big picture goal, which is to get to a AUM of 1 lakh crore by end of fiscal 27.
So that's the management of Sammaan clearly indicating what's the outlook going ahead, but the stock, after the kind of run-up that we saw, has cooled off today. Let's quickly slip into a short break. On the other side, we'll get to the top buy today, sell tomorrow picks. Please stay tuned.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है यार।
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना, हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or
Welcome back to India Market Close right here on NDTV Profit, but we still have Kunal as well as Neeraj still with us. Kunal, let me come to you. Any specific view that you have on Avantel, because that stock is seeing a sharp up move in trade today? Anything on the charts that suggests a continuation of the move?
See, I think today the stock has given us a breakout above that 195, 190 zone, which was a strong resistance for the stock. So again, there has been volume-based buying in today's trading session. However, we need to have a follow-up move in the stock as well. If that continues, you can confirm that the stock is ready for the levels of 230, 235. I'll not be a buyer at the current levels. If you're already holding from the lower levels, continue to hold with a trailing stop loss. For fresh entry, I'll probably wait for the next week and how does the stock move in the first two trading sessions, and probably then one can see the continuation of them.
Okay, so that's with regards to where Avantel goes. In fact, Neeraj, let me come to you with the metal pack as a whole. Smart moves coming in from a JSW Steel to a Tata Steel. Last couple of trading sessions have been really strong. Counterplate to the way silver has been moving, to the way copper has been moving. Is the cycle ripe enough now for someone to enter still, or do you think this is just the last leg of the rally and you would avoid?
No, I would not say this is the last leg of the rally, but stocks have moved a lot in the short period of time in the last couple of weeks. So one can wait for some dips. Like you saw in Jindal Stainless, the stock went to 800, 810. We saw a dip towards 740. So there'll be the sell-offs which will come. The stocks will not keep on going in a single line, up. I think there will be corrections, and one should look at corrections to accumulate or to buy, and not change them when they've already run up in the last couple of weeks. But I don't think this is the last leg. And if you get these corrections, there'll be an opportunity. And I think there's still money to be made in metals, even in the non-ferrous space. I think there is still a lot of stock.
Got the view, Neeraj. But time to put spotlight on some small cap buzzers of the day. Anushi has a few on a list today. Anushi, what are some of the key ones that you're picking up?
Hi, so I'll start off with Borosil Scientific first. Now you're looking at strong volumes in this counter. In fact, volumes are up 25 times in comparison with its 30-day average. Now what the company essentially does, it's into glassware and laboratory products is what we are looking at with its business segments spanning across scientific segments, lab glassware, lab equipment and procession systems as well. Do note that in the first quarter though, the company did see an impact in terms of its sales due to degrowth in export sales and impact of the Indian accounting standards as well. In fact, there was also a delay in terms of where the order execution had played out, which resulted in that impact on in terms of the top line. Second one on our radar is John Cockerell. Now this one has been a strong mover this week. Volumes trading over 2 times today compared to its 30-day average. Now what the company does, it designs cold rolling mill complexes, processing lines, chemical equipment and industrial furnaces as well. Now why the stock is in spotlight today? It has signed a contract with Godavari Power and Ispat, and this is for their cold rolling mills that we are looking at, the execution with the global components also that we are looking at. So this is stock in focus. Apart from that, Unimec Aerospace is a stock that is also in focus on the back of the second quarter business outlook, wherein the management sees that the second quarter revenue would be marginally lower than the first quarter, and this is due to the US tariffs impact, which would lead to a decline in terms of where the exports are concerned. Do note that almost 80 to 90% of the company's revenue is through exports is what we are looking at. In fact, with this, the management also sees that they might miss their FY26 guidance because of these headwinds present. So it's seeing about a 5% of a intraday low. Today it's locked in a lower circuit as well. So these are the 3 stocks which are buzzing in terms of the business updates that we are seeing.
Got that, Anushki. Thanks so much for joining in and giving us perspective on all those stocks. Kunal, any view that you have actually on John Cockerell as well as Borosil Scientific, because John Cockerell actually has seen a sustained momentum over the last week or so. Anything on the chart suggesting for both of these counters?
I think for both of the counters, what I have seen on the technical charts, there has been volume-based buying from the lower levels. But again, the stock has been into deep correction. So still you need a confirmation for the entire move to play out. Probably too early to call as a buy at the current levels. For Borosil Scientific, I'll wait for a breakout about 150, 151, and probably post that one can go aggressively long onto the stock.
Got it. In fact, Neeraj, let me come to you on the defense pack. A good amount of buzz that's coming in. You have a Goldman Sachs which has come up with a report as well on defense, on the back of which names like Solar Industries, PTC Industries, all of them seeing a good uptick from a DCX Systems from a 2% upside to a Astra Micro, which is up almost 11 to 12%. These cycles that we are seeing with regards to the defense pack, would you be a buyer? What would you advise investors to do?
Yeah, I am positive on defense space as a whole. So again, there will be opportunities. You will get a period where people are not talking about defense so much. You get some correction because there will be noise around valuation. Because you look at any stock, the valuations are not cheap. So stocks are expensive, but then they are long gestation projects, and there's so much of money which is going to be spent on defense that the growth will ultimately come, and the growth will be huge going ahead. So if one is looking at a 3 to 5 years perspective, I think defense is a good thing even to invest today. And if you are looking at a shorter term period, then you should wait for opportunities, some corrections to enter into defense. But then go for the names, large name, which you've seen the execution capabilities. You've seen how the numbers have been. You've seen the balance sheet. So go for the bigger name in defense and have a longer term perspective.
Neeraj, let me just ask you also in terms of your any of the topics, because you rightly said that in the short term the defense theme would be something where you could see some moves, but in the longer term, we've seen BL as a top favorite amongst funds as well as individual investors. What do you think of these private defense companies that have suddenly come to light in this particular report? Someone mentioned something like Azad Engineering is also seeing a very strong move today. Do you think that you want to stick with the larger ones where you're seeing government ownership, or you see some niche technology companies in the larger mid and small cap space in the defense side which are starting to come and see that exposure now as some of the key preferred plays here?
Of course, one is a the government-owned companies, whether it's HAL or Nasdaq or BEL. Of course, data patterns, I'm positive on this space. Besides this, even the private sector one, they've been companies which have existed for quite some time. To name a couple of them, of course, you'll have to see the valuations, take your advice, and then buy. But there's companies like Zen Technologies, companies like Astra Microwave, they're from the private sector and they have been there for quite some time and they've been delivering, they've been executing, and we've seen how the companies have grown over a period. So in the private sector space, especially looking at companies in the small mid-cap space, one has to be very careful to choose what company you want to invest in. See, there may be a company which has a good growth plan and huge capex they're doing it right now, but they may not be as ahead. Some of the companies are already there and have been dealing with defense and have been executing and coming out of product. So one has to be careful in choosing the stocks in the private sector. But of course, the government-owned companies and in the larger ones, even like Larsen and Toubro, Larsen and Toubro also is now getting a lot more into defense, and they're also talking about a different order book for defense. So the large one in private sector banks are also there, which can be looked at.
Okay, so that's with regards to where defense as a pack goes. In fact, let's pull up a L&T. In fact, they did get an order win today, which is, I think, a large order, and the stock is at the day's highest levels as well, 2% up move coming in on this one. Let's look at the volume buzzers. Now, Silks we've already addressed on the back of the business update, but the volumes are up almost 63 to 64 times. It's 30-day average. V-Mart Retail, similar story there. Sanhur Manganese is another one. 40 to 41 times is the kind of uptick that you're seeing in terms of volumes. Orissa Minerals also 17 to 18 times. And EIH, which is seeing volume uptick to the tune of almost 15 times its 30-day average. And strong moves coming in all of these 4 to 5 names. In fact, Kunal, anything that you would want to recommend from this pack?
Sorry, can you please repeat these stocks?
Yeah, I'm talking about Silks, V-Mart Retail, Sanhur Manganese, Orissa Minerals, as well as EIH.
If I look at the chart perspective, I think Sandur Manganese looks the best from the current levels, where we have seen a fresh breakout into the stock. So probably there could be still more upside left. The stock had faced resistance around the mark of 185. That was again the rejection zone for the stock. But today there has been strong volume-based buying action. Already the stock is up 15%. So probably any correction towards that support of 187, 190 would be a good buying zone where one can go long and look for targets of 210 to 215 on the upside.
Sandur Manganese. In fact, Neeraj, let me come to you on the consumption pack from a V-Mart Retail to a V2 Retail. Good pickup that you're seeing in terms of stock price. Consumption as a story is something that people are wanting to bet big on, but do you think valuations are supportive at this current point in time? And would you be confident enough to tell an investor that, yes, look at consumption as a pack, this could be something that will give you returns over the next 6 to 12 months?
Yeah, I think so, because the kind of GST benefits which have come and we've entered the festival season, and interest rates are low, liquidity is good, and there have been RBI measures where they are increasing flow of liquidity also into the system. So all this will definitely augur well for the consumption space. So, but again, you have to choose your stocks well, because there'll be stocks which are already trading at high valuation. So I think consumption story is good, and you have good opportunities there to make money.
Okay, so that's with regards to where, the consumption pack as a whole goes. But moving on, it's just a couple of minutes to 3:15 and it's time for the Profit Intelligence segment. M&M, that's going to be in focus because it might beat the tractor industry sales growth estimates in FY26. Puneet has done the number crunching and he'll tell us what the analysis points out to. Puneet, over to you.
Well, thank you for that. It's definitely been a stellar month in terms of September sales for the company, and because of that, it's begged the question: will M&M actually beat the industry growth guidance of 7 to 8%? Is what they said at the start of the year, and that is what signifies the future momentum of H2 on what that could be for the counter. Now, when you look at the year-to-date volumes, they're up 20% for the counter in the first 6 months of sales versus the 7% that the management had guided as well. Of course, the 12% was including the first 5 months. Then you see a 66,000 number reported by the company, so you're seeing that growth as well. But the company might actually beat this given the positive momentum that's happened already in the first 6 months. When you look at, that's led by multiple key factors. The GST rate cut is definitely one of them. From 12, it's gone to 5% now on tractors, as well as the positive momentum and farmer sentiment, which was boosting further sales in these 2 months of September as well as October. We've already seen the September sales of 66,000 beat the highest sales that was in the last October of 65,000. So definitely it's a positive. When you look at the second key aspect, FY24, the company sold roughly about 3.78 lakh units. They showed a 12% growth on an overall basis for the year of FY25, signaling a 4.24 lakh sales that the company did in the whole of FY25. But this growth of 12% wasn't straight bound. It was divided between H1 and H2, and that largely when you see the next plate, you will see the growth. In the first half, they'd only done about 5% growth, with a 21% growth in H2 between October 2024 and March of 2025. That led to the overall sales momentum to come in at 12%. And hence, this year is more interesting to say the least, because in H1 of FY26, the company's actually already done 20% of sales growth. Even if they're able to maintain the kind of growth they did last year, it'll be much higher than the company's guidance of industry growth of about 7%. And that's the key question. What will be the other key things to watch out for essentially at this particular point of time? Festive is split between September and October. This year we had the Navaratri in September month, and that's why the H1 FY26 sales have been boosted. So you have to keep that in mind. The other key aspect is that in 2025, Navaratri gave a huge boost to those sales, and hence going into October, that'll be the other key aspect to watch, because you will get the strong momentum. So it's important to see September as well as October. That's what the management has also guided. And the base effect also comes into play now, because last year the growth was only 5%. On that base, a 20% growth has been done. So that's the key question. Finally, let's also just get this argument into a financial picture as well, because on a standalone sales basis, the tractor segment contributes 25% of the revenue. But when you look at the EBIT, it's almost 40%. So any kind of incremental growth that comes in the M&M tractor division is a huge boost to the standalone auto segment of Mahindra and Mahindra as well. So that's the key, in profit intelligence segment on Mahindra and Mahindra today. There are multiple key factors, but they are on the way for a strong H2 performance, at least in the tractor segment.
Okay, so that's with regards to where M&M goes. Neeraj, any view on what Puneet just got to us with regards to whether M&M will be able to meet industry growth in FY26? Is that the data that you would look at as well?
Yeah, I think definitely the kind of growth you see in M&M, the way they've been executing their new launches, I think they're doing quite well there. Whether it's the EV segment, the SUV segment, tractor, so the growth has been very good. I think that should continue. They should be able to beat the guidance and even the industry growth. So I think generally you've seen numbers improving for M&M over the last few quarters, and I think that should be the stay going ahead also.
M&M. Now let's look at the IPO space as well. Tata Capital will be actually opening on Monday. But before that, Truworld Bioenergy and Jinkushal Industries, both of these listed on the bourses. Truworld Bioenergy is seeing a pretty decent sustainability on the first day, 7%. It, I think, listed with gains of around 9 to 10%. Jinkushal has turned into the positive, but pretty flat right now. Neeraj, would you be a buyer of any of these two from a fundamental point of view?
No, I don't have any view on these stocks.
Okay, and what about a Tata Capital? The IPO opens on Monday. We're talking about 15,500 odd crores. The price band is 310 to 326, out of which almost around 6,850 odd crores is going to be a fresh issue. It's Tata Sons and IFC who are going to be the selling shareholders. What would you advise investors to do with a Tata Capital?
I think Tata Capital is coming out at a very good price. I think people are not expecting them to come at this kind of a price. And, even in the off market, the stock was trading at a much higher price. And there was expectation that they'll come around 450. So they have beaten that expectation and coming at a much lower price. And for a financial company, capital is raw material. So they're going to raise this money and they're going to utilize for their growth. So I think this is a good IPO, and people should be investing in this. The only thing that you have to be, you have to have a 2 to 5 year view when you're investing in these kind of stocks.
Neera, just to follow up on what you mentioned about M&M, the stock has run up also at this particular point of time, and you've seen that in other plays like Maruti Suzuki amongst others. Do you feel it's a better bet to look at the other companies like Escorts in the tractor space, which hasn't seen that kind of bullish momentum, or something like a Bajaj Auto as well? Because while the growth subside, the valuation has subdued because of the lack of move in these counters. So would you also look at the second rung companies essentially at this point of time?
Let's divide between two-wheelers and four-wheelers. In the two-wheeler space, definitely, whether it's Bajaj or a Hero Motor, they have been lagging behind. So their valuations are very attractive. I think Hero has a better scope depending on, because looking at the valuation, still available at 17, 18 times, if I'm not mistaken, the last TTM earnings. So Hero would be my preferred bet as far as two-wheelers, and even Bajaj Auto should be looked at. Valuation-wise, they have been trading at discount to their historical valuation. And coming to four-wheelers, and two-wheelers, if you look at TVS Motor. So TVS Motor has done the same thing with M&M has done in four-wheelers. So they both are portfolio stocks, If they are in your portfolio, you need to hold on to them because they've not done anything wrong for you to, sell them at this point of time. So as a portfolio, they should stay in the portfolio. But if you're looking at putting in fresh money in the four-wheeler space, you're right that you can look at other options. There are options like Scots. There are options like something like Action Construction Equipment, which is into construction equipment and tractors and related equipment. So these kind of stocks can also be looked at if you're looking at the construction equipment off-road or the four-wheeler space.
Okay, so that's with regards to where the entire auto pack goes. As Puneet was asking, whether the next leg of stocks that should be considered or not. But moving on, we've already discussed the defense space. Now let's talk about real estate as a sector. What's happening, Puneet, in the real estate space right now is where there is buying interest, but a lot of markets which are seeing a downtick when it comes to the sales number, the pre-sales number. The first quarter, was weak, and that's usually the trend. A couple of managements that we're talking about also are indicating that some markets are seeing strength. For example, Bangalore, there is resilience, but there is a risk when it comes to IT as a sector, because more than 60% of the exposure that real estate players have in the Bangalore market is from IT players. With the layoffs coming in, with the H-1B visas coming in, with Hire as an Act coming in, probably there could be concerns there as well. So everyone is not really confident of real estate as a sector right now.
Definitely, and I think the pricing also comes into play, right? Because I think Anushka had put out the story that Delhi as a market is starting to see that kind of pricing momentum yet again. So let's get in Anushka actually to get us some perspective on a Morgan Stanley note as well, and also on some perspective on what she's picked up on the pricing in Delhi market as well. Anushka, over to you.
So the update, Puneet, what we are looking at is that there might be an upward revision in terms of property prices for the NCR market, and this is an interesting one considering that just in this recent months we've seen the property rates being increased in Karnataka, as well as that Freddie Reckner rates had been increased in Maharashtra as well. So with this, if this is implemented, then since 2008 we will see this kind of an up move coming in from the NCR market. Now these are the circle rates that we're talking about, which are minimum property valuation rates in any given area, and this is not restricted towards any one particular area that we are seeing. It's for the overall size that we are looking at, across categories that we are looking at. This includes the likes of premium as well as super luxury as well. Now here the stocks in focus would be something like a DLF, which is one major operator in terms of where the NCR market is concerned. Signature Global, Anant Raj, a couple of other names that you should be watching out for, along with something like a Max Estates, which is also a mid-cap stock that we're talking talking about. But apart from that, an interesting note came out from Morgan Stanley, and this is on the expectations for the second quarter. So despite seasonality, they saw that the bookings have remained relatively better off. In fact, they expect the top 5 developers to register pre-sales growth of around 11,000 crore, which is a 44% of an uptick that we are looking at. This would be led by something like a Godrej Properties as well as DLF to report stronger numbers in terms of where the bookings are concerned versus the expectations. However, Oberoi Realty and Lodha could disappoint given that there were no new fresh launches which had been announced in the quarter so far. So tad bit of dip in terms of pre-sales is something that we could be watching out for. But this is essentially what's happening in the real estate space.
Much done, Anushi. Neeraj, final question from our side. In the real estate space, do you continue to look at the bigger players? You've seen companies like DLF now enter the Mumbai market as well, and Anushi did highlight the pricing in Delhi NCR. What's your view on the space and anything that you like right now?
See, because I'm from NCR, so I follow the prices, what's happening in NCR quite closely. So I think there's definitely some traction. There's some improvement in demand inquiries which have started happening in the NCR market. So DLF is very strong here. So DLF, I think the way they've been beating their guidance on pre-sales like last year also, I think they said also they'll be able to beat their guidance easily with the kind of launches they've already had so far. And other stock that I'm positive on is Max States, because they're a newer player. They've been there for last few years, but then the kind of launches they've had, the kind of growth that they're doing, and the backing of Max New York Life that is there with them. So I think that company is doing well and should continue doing well. So I'm positive on the real estate space, and with the kind of interest rate regime we're in right now, I think towards now and from now till end of the year, I think demand should really pick up for them.
Okay, demand should pick up. So Max States 6% up move is what you're seeing. Thank you, Neeraj, so much for joining us on the show and sharing your views. In fact, Kunal, time for BT, ST, ST, what would you go for?
Yeah, I'll go here from the PSU Bank space. CanBank is a BTST trade here, already trading in a strong uptrend, and we expect this momentum to continue even in the next week. So that's a buy for me, keeping a stop loss of 122, looking for targets of 128 to 130 on the high.
Okay, so that's the call coming in, BTST call from Kunal. Kunal, Lloyd's Engineering and Aegis Logistics, both these counters are seeing some great momentum. 11 to 15% is the kind of up move respectively on these names. Would you be a buyer of any, or would you advise profit booking?
Okay, I think Lloyd's Engineering looks good on the chart. Just a 5% up move in the stock from the current level. So the entire correction phase is over, and we are seeing the stock again hitting back to the demand zone. So we can expect a good rally towards the gap area of 67, 68 in the very short term.
That's with regards to where Lloyd's Engineering goes. Apart from that, if you have to look at any of the Nifty 50 stocks in trade today, and if you talk about the top gainers in today's session, we just have the likes of a Tata Steel, Power Grid, Axis Bank. In fact, a positive call that did come in on an Axis Bank, from a brokerage house. Your view in terms of Axis Bank and with regards to Coal India, both of them seeing divergent trends today.
Yeah, I think Axis Bank was one stock when the Bank Nifty was correcting. Axis Bank was showing relative outperformance, and which is where now when Bank Nifty has started to perform, this will continue to outperform as well. So I think Axis Bank has still upside left towards the mark of 1230, 1240, where the stock can go into. So I'm bullish on the stock. But if you talk about Nifty 50, I think L&T is one stock which you should keep on your radar for next week. Already the breakout had come in. Now the stock was consolidating at high levels, and now it's ready to see the big move coming in. So L&T is something which I'll be interesting on the buying front. 3600 is a very strong support. I'm expecting the stock to go towards 3950, 4000 mark.
Got the view, Kunal. Kunal, we'll let you go on that note. Thanks so much for joining in, giving us your view across a bunch of sectors, and a very happy weekend to you. But with that, let's wrap the markets now, because we've seen actually a very strong session at the end, where we saw buying coming into the Nifty 50. We are ending above roughly about 60 points up, very close to the 24,900 marks. So that will be a key positive going into Monday's session. While the Nifty Bank as well has continued a positive momentum. We started the show with about 0.2% or 0.3% odd gains. We are ending it with almost 0.4% gains, at least on the Nifty Bank, and that's one key segment that's continued its positive momentum over the last week, continuing from the RBI post meet as well, MPC meet as well. Look at the Nifty 50 heat map very quickly. We were seeing some pressure on stocks like Max Healthcare, and that's continued to be the case, as well as Coal India, and Kunal just spoke about that. But something like a Tata Steel, Power Grid, Axis Bank have continued the positive momentum. We just mentioned about the positive brokerage note on Axis Bank, so that's key. L&T has starting to show that kind of positive momentum again post them selling off the Hyderabad Metro to the state government. So the pressure on the balance sheet won't be there anymore. So that's another positive. BL has continued to show strong strength, and that is another up 1.46%. Amongst others, we've seen something like an Asian Paints also closing just almost a percentage above, and Interglobe Aviation as well. While the other names in terms of the auto pack have largely remained flattish today. Even so, you saw those reactions coming in on the first. Yesterday was a holiday, so largely flattish reaction on stocks like M&M, on Tata Motors as well. Let's look at the sectoral heat map now, because you will see the sectors like PSU Bank amongst others be very key. It's up almost 1.1%, but the Nifty India Defence Fund has been the top gainer today. It's almost up 1.99, almost 2% now as we speak. Nifty Metal has continued its positive momentum, so that's another key positive trigger. While on the losing side, very minuscule, so not too much to talk about. Consumer durables, CPSC amongst others, private banks have also done well today in trading sessions. So overall, a lot more green compared to the red. Advance decline ratio very quickly. We were seeing a consistent buying on the advances, and that's been the case. We actually inched up slightly over the last hour and a half, so that's a key positive. Almost 2:1 in favor of advances. The mid cap and the small cap is the other one where we saw positive momentum today, and that buying came in the last hour and a half or so. So very strong move, 0.8% on the mid cap, and a similar move is seen on the small cap as well. Finally, the BSE 500 to cap off a very strong week for the market, especially in the second half of the trading session. KIOCL actually ended up at 20% in the trading session. V-Mart is the other one where we saw a 16% move coming in post this quarterly update as well. Aegis Logistics has been on a tear since multiple brokerage reports have come in on that particular space, so that's a key positive. Borosil Renewable, MRPL is some of the other ones. JK Paper up 7.4%. We also saw Sai Silk also close above 15 to 16% in the trading session, so that's another key positive. And in terms of the losses, not much. Sun TV has seen some pullback from Wednesday's levels. Max Health we've discussed during the show as well. Adani Power, Soha, as well as Metropolis are some very minuscule moves, but something to highlight as well. But some of the other cues that going into Monday that you should actually be watching out for, Excel Realty, Shraddha Infra Project, as well as Muthoot Capital will be in focus. Fundraise for the couple of them and a general meet, and the big IPO starting Monday will be Tata Capital. We have also LG to watch out for as well from Tuesday. But for Tata Capital, this is the price band. A huge IPO of 15,500 crores as well is something to watch. The last big IPO that we had was something of Hyundai last year of 27,000 crores. So this will be one. And since it also has a fresh issue as well as something like an OFS, a lot of retail investors will be invested into this particular IPO as well. Pace Digitech is the other one which will see listing amongst others, and that's one of the other key ones to watch. But overall, it's a week that's ended very well in the last hour and a half. But that's all the time that we have on this edition of India Market Close. From here, myself, Somit, everyone who put the show together, thanks so much for watching, and have a very, very happy weekend.
the gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in. Where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So let's just first see how the markets have fared today. So the Lal Street ended a choppy day on a good note. Nifty managed to climb above 24,900 levels and Sensex also jumped over 200 points. Now this has marked the second day of gains for the benchmarks. While broader indices notched gains for the fourth straight session, now most sectors have ended the day in the green with defense, metal and PSU banks leading gains. Auto and media were on the back foot. Benchmarks have gained over 1% for the week with the ends near 24,900 levels. Shriram Finance and Tata Motors have gained the most in Nifty. Nifty PSU banks have gained the most and up over 4% for the week. Now let's look at brokerage note on India's growth pivot. Now Morgan Stanley believes that India is entering a new phase of growth with market and earnings peak still ahead. So the brokerage has shifted its portfolio, favoring the domestic cyclicals by going overweight on the financials, consumers, discretionary and also the industrials, while staying underweight on energy, materials, utilities and also healthcare. So key structural positives driving this shift include improved macro stability, shrinking oil intensity in the GDP, expanding services exports and also lower inflation volatility, which support higher valuations and also lower the real interest rates. Now, according to Morgan Stanley, government policy supporting growth through recent interest rate and also the reserve cuts, which is higher capital expenditure and GST reductions, with further RBI rate cuts and policy reforms expected to add the momentum. Now let's look at Trualt Bioenergy shares, which has made a solid stock market debut, listing at a premium of nearly 10.9% over the IPO price of 496 rupees on both the BSE and NSE. Now the 840 crore IPO was hugely oversubscribed, and this is signaling a strong investor demand, especially from institutional buyers. Now shares have opened at 550 rupees on BSE and 545 rupees on the NSE. Now the company has market value of 4,716 crore rupees. The company has clarified that the funds raised will actually fuel its expansion into grain-based ethanol, debt repayment, and also new capacity for sustainable biofuels. Realty stocks are in focus today. Morgan Stanley expects that a strong Q2 for top developers despite seasonal weakness. Now, pre-sales could actually touch 11,000 crore rupees, with Godrej and DLF likely to lead the pack. However, Lodha and Oberoi may actually underperform this quarter. In fact, Delhi's property market may see a shift. Now, the government is looking to revise the circle rates, the minimum property valuation in any area. So the move aims to align these rates with current market prices. Public feedback has been invited, and the revision could actually impact the transactions across all the property categories. Defense stocks on the radar, with Goldman Sachs projecting a strong outlook for the key players. Solar industry stands out with the best asset turns and also strong return on equity. Astra Microwave and Data Patterns are expected to benefit from the margin gains and lower capex. Now, Azad Engineering's robust order book signals high growth. Now, BL remains well positioned, while HAL and Bharat Dynamics face the execution risk despite attractive valuations. Let's now look at the auto sales for September. That came in largely strong. So 7 out of 10 OEMs either beat or met the expectations. Hero, Bajaj, Tata Motors, Hyundai and also Escorts have outperformed. M&M and Ashok Leyland were in line with the estimates. TVS Eicher and Maruti, however, missed the mark. Next stock that was buzzing in trade today was Adani Green Energy. Now it has announced the commissioning of 2 new projects at its massive Khavda Renewable Energy Park in Gujarat. The company has successfully brought online a 50 megawatt solar power project and a 31.2 megawatt wind power project. Now these additions part of one of the world's largest renewable energy clusters under development, substantially, increasing Adani Green's operational capacity. With these latest commissionings, the total operational renewable energy generation capacity at the Khavda site now stands at an impressive 16,679.8 megawatts. Now, in the jewelry space, viewers, PC Jewelers has announced a strong financial performance for the second quarter, which is driven by robust festive demand. Now, in a key operational update, the company has reported that its standalone revenue has surged by an impressive 63% year-on-year for the quarter ending September 30th. Equally significant, the company continued its focused debt reduction strategy, cutting its outstanding bank debt by approximately 23% during this quarter. Now, this is in addition to a substantial reduction made in the previous fiscal as well. Aerospace component manufacturer Unimec Aerospace is feeling the pressure from the international trade tensions as US tariffs have impacted its second quarter performance. Now, the company has informed the market that it continues to experience a slowdown in revenues for the quarter ending September 30th. That is the quarter 2. So revenues are expected to be marginally lower compared to the preceding first quarter, a decline directly attributed to the imposition of the US tariffs, which have affected the export revenue realization. Now, the tariffs have caused customers to delay the order pickups while they monitor the trade environment. Value retail chain V-Mart Retail has announced a strong provisional business update for the second quarter, demonstrating robust growth driven by both existing and the new stores. So the company has achieved a total revenue of 807 crore rupees for the quarter, which is marking a substantial 22% year-on-year growth compared to the same period last year. So the growth was supported by strong in-store performance, with same-store sales growth exceeding 11% across both its V-Mart and Unlimited retail formats. Now, leading ethnic wear retailer Sai Silks has reported a surge in its financial performance on the back of strong consumer demand. So, the company's revenue for the first half of financial year 2026 or H1 FY26 clocked in at an impressive 823 crore rupees. Now, this marks a robust year-on-year growth of 34%. Zooming into the last quarter, which is quarter 2, has seen a revenue rise to 444 crore rupees, growing by 28%. So, looking ahead, management is extremely optimistic and maintaining a long-term outlook of 15% year-on-year revenue growth for the next 3 to 5 years. So the confidence stems from the strategic expansion plans, which actually include opening 10 new stores. On to some more corporate action. Major financial player Nuvama Wealth Management has received a crucial green light from the market regulator SEBI to set up its own mutual fund business. Now, in a move that signals a significant new revenue stream, SEBI has approved Nuvama to act as the sponsor for the proposed Nuvama mutual fund. Now, this is the final step before the firm can officially launch its schemes, pending the fulfillment of final regulatory requirements. The plot thickens in the alleged TCS layoffs in Pune as the IT employee union NITES has made a direct appeal for urgent intervention from the Chief Minister. Now, NITES alleges that nearly 2,500 employees in the company's Pune offices have been forced to resign or abruptly terminated. Now, these affected professionals are primarily mid to senior staff with long tenures of 10 to 20 years. Morgan Stanley maintains its overweight rating on Axis Bank and raises the target price to 1,450 rupees. The brokerage revisits the bank's turnaround story, noting key strategic steps taken over the past year. Now, it expects a gradual re-rating as the micro environment improves, with gains likely, across NIMs, growth, and also the credit costs. Time for an exclusive. Sources tell NDTV Profit that acquisition financing may get the green light, but with conditions. So banks may be allowed to fund acquisitions, but financial sector deals will remain off the table. Lenders must stick to the regulatory limits, even as private credit intensifies competition. So banks have been pushing for a review to level the playing field. GHCL has asked the government for anti-dumping duties to curb the cheap soda ash imports from China and other countries that are squeezing local margins. Now, India's soda ash demand is growing at 6% annually, but depends on higher cost synthetic production as it lacks the natural reserves, unlike China, US, and also Turkey. Now, despite price drops, GHCL has managed cost efficiencies and also operates at 98% capacity, while pushing for a new 6,500 crore rupee plant to actually double the production amid rising solar glass demand. Now, the company has stated that the anti-dumping duties are seen as a short-term fix. Long-term competitiveness will actually come from cost optimization and also growing exports to markets like Bangladesh and Sri Lanka. Elon Musk's AI startup XAI sued OpenAI last week, accusing it of poaching employees and also stealing trade secrets. So OpenAI has denied these claims, calling the lawsuit baseless and a distraction from XAI's own shortcomings. So OpenAI said that XAI's real aim is to bully former employees who chose to leave and work elsewhere in the AI industry. The case is now before a federal judge in San Francisco, with OpenAI seeking dismissal of the suit. Tata Motors have reported a record passenger vehicle sales of 60,907 units in September 2025, which is marking a 47% year-on-year surge, and it's also the highest ever monthly sales. So the growth was driven by the rollout of GST 2.0 and festive demand during the Navratri, with domestic sales rising 45% to almost 60,000 units, and also strong performances from the models like Nexon, Harrier, Safari, and Punch. Meanwhile, EV sales nearly doubled to 9,191 units in September, and a 96% increase year-on-year, while CNG vehicle sales surged over 105% in the quarter. So Tata Motors shares have gained over 2% in early trade to 735 rupees on the NSE. Finance Minister Nirmala Sitharaman says that global uncertainty is no longer a passing phase, so it's structural. Speaking at the quarterly economic conclave, she highlights how the global order is shifting fast, with traditional rules being rewritten. Now, she stresses India's rise as a stabilizing force driven by domestic demand, capital spending, and also low inflation. So, FM also calls for reform in the multilateral institutions and also says that self-reliance is key to India's 2047 vision. The government has taken a big step towards regulating India's fast-growing online gaming sector. So the Ministry of Electronics and IT has released a draft rule under the proposed Online Gaming Act 2025. So the rules call for setting up a new regulator, that is the Online Gaming Authority of India, which will oversee the registrations and also licensing for game providers. So companies will need to register the games for a 5-year term, after which renewal will be required. Oversight has also been split, with the esports coming under the Sports Ministry and social or casual games under the Information and Broadcasting Ministry. Now, these draft rules aim to bring more accountability and structure to the online gaming ecosystem. President Donald Trump is considering firing thousands of federal workers to pressure Democrats to end the government shutdown that has now entered its second day. So the White House plans to cut jobs in agencies deemed wasteful or unaligned with its values, with Budget Director Russell Vought leading the review. So Republicans argue that Trump has the authority to make cuts during the shutdown, while critics warn spending on layoffs may actually be illegal and also harmful. So the shutdown has furloughed around 8 lakh federal employees, costing $400 million daily, with no immediate resolution expected as political blame continues. On to some more global news. The death toll in a powerful earthquake that hit the central Philippines late Tuesday rose to 72 Thursday, with nearly 300 others injured. Now, seismologists say that the earthquake in and around the city of Bogo was triggered around 10 p.m. by a shallow undersea fault line that hasn't moved for at least 400 years. Officials say that the earthquake damaged or destroyed 87 buildings and also nearly 600 houses and affected around 2 lakh people. Now, in a significant shake-up in the world of chess, India's young Grandmaster Gukesh has dropped out of the 5 top 10 rankings. Now, once celebrated as the youngest player to enter the elite list, Gukesh now faces stiff competition as the global rankings shift. Meanwhile, in a promising turn for Indian women's chess, Divya Deshmukh continues her steady rise, climbing to an impressive world number 11 in the women's rankings. The ICC Women's ODI World Cup 2025 is off to a thrilling start, and it's Bangladesh who has made an early statement. Now, in their tournament opener, they put up a solid all-round performance to actually defeat Pakistan and also begin their World Cup campaign on a winning note. So the bowlers did well to restrict Pakistan to a modest total, and the batters held their composure in the chase, showing maturity under pressure. Now, time for an NDTV Profit exclusive. We sat down with the fastest man alive, Usain Bolt. Now, from his experiences in India to the setbacks that shaped his journey, Bolt shares insights into the mindset behind his legendary success. Listen in.
The lightning bolt has hit India, and he's in Mumbai right now. Sitting across me, you know who I'm talking about, the man who holds the record for the 100, 200 and 100 into 4 relay, or rather, yeah, that's what it is. Usain Bolt, thank you so much for speaking to me today, and it's an absolute pleasure. You're in India for the second time. The last time was 14 years back. A lot has changed. What stands out this time around?
More people. But I'm here for a longer period of time, and I've actually got to try the cuisine this time. You know, I mean, last time it was just in and out. Met a lot of people, seen the young athletes, so there was so much.
Yeah, I'm not surprised you said lots of people because it's the most populous
Yeah,
country in the
yeah.
world. But having said that, there are actually, and I was doing a little bit of reading before this interview, a lot of commonalities, particularly in the cuisine. It's interesting that you mentioned that, the lamb curry and the roti.
Yeah.
Have you had a chance to try it out?
When I was here the first time and I tried it, I was like, oh, this is magnificent, you know what I mean? Because the curries are different in Jamaica. It's a different type. So for me, when I tried it, it was wonderful. So I've had it like almost every night since. So that's good.
So the people that you've met, and you've interacted with a lot of athletes, a couple of young sprinters in India as well. You see promise there.
Yeah.
What do you see that you like?
Yeah, I was talking to the young athlete and he was saying, can't remember his name, he's just started to run the 100 and 200 meters and I met him. He signed with Puma. We were having a conversation and he shows a lot of promise. And he was asking me about starts and because he's also tall. And so we had a great conversation, you know what I mean? And I told him if he needs any advice, contact me and I'll try to help out as much as possible.
That's really magnanimous of you. But speaking about height, you're 6'5". It's not evident because you're sitting down. And a lot of people who don't know about this, when you're talking about sprinting, you need to have a slightly lower
center of gravity.
And so you're 6'5". You've challenged it right there. You had scoliosis that you were, it was diagnosed, and that's a curvature of the spine.
Still do.
How did you get past that?
It was a lot of challenges. Those are the two main challenges. For me, scoliosis was just something there to maintain. It was a lot of core work to keep my core steady, so because I would pull my hamstring all the time. And the start was just, I had to work on it immensely, but it became average. So that was okay, because the end of the race is all my best part of my race, so all I had to do was make sure I got a good enough start.
You know, everybody who watches and anybody who's had internet over the last decade and a half probably has seen that race. In the last part of that 100-meter where you've pretty much, you've not hit the record, the line yet, but you've already celebrated, and people are thinking he could have gone faster. Did it ever occur to you?
Yeah, but it was never about running world records, because at the time I had the world record. So for me, it was just going to the Olympics to win. You know what I mean? It was my first season really pounding out the work. So I was just happy to win, you know.
So when you think about the journey that you've had and you look back, of course, you've overcome these challenges, but I'm just wondering about the mental state, because you've rebounded several times from injury. You mentioned that your hamstring is given up, right? What is the mental state that requires?
I think at the start it was tough, but after I met my coach, Glenn Mills, he kind of gave me more confidence, because he would explain to me, listen, injuries are part of the sports, and the first thing he did is that, listen, we need to find the root of your problem, because I didn't figure that out until I started working with him, you know what I mean? And he said, all right, the scoliosis is the problem. What do we need to do to avoid this? And that's kind of what gave me the confidence, because I knew that I had somebody that knew exactly what we needed to do at all times to make sure I was okay.
Is he your biggest motivation or somebody else?
Yeah, for me, my coach played such a big role. It's like my second dad, you know what I mean? He really supported, not just in track and field, but in life. He would give me advice with everything. So it's something that I really, really have to give thanks for.
Okay. Any advice that you would give to people that are starting out? Because a lot of people in this country as well want to be sports people, but then it's all or nothing pretty much. You hit the peak. What advice would you have?
Make sure it's something that you love. You know what I mean? That's the first thing. I think you have to love anything you're doing. And then take your time, learn your craft, and give it time. You know what I mean? Nothing's going to happen overnight. Take your time, believe in yourself, and just push through.
On that note, Usain Bolt, thank you so much for taking the time. Pleasure speaking with you. It's very close to Diwali. And I'm not sure if you know that it's a big festival here in India.
Okay.
If you could look into the camera and say Happy Diwali to everyone watching.
Happy Diwali.
Speaking with you. It's very close to Diwali. And I'm not sure if you know that it's a big festival here in India.
Okay.
If you could look into the camera and say Happy Diwali to everyone watching.
Happy Diwali.
The gate of the community was becoming friction point or choke point while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और
Benchmarks gain over 1% for the week with over a 300-point gain from the weekly lows. All sectoral indices close higher for the week with Nifty PSU Bank as the top gainer. RBI's acquisition financing rules for banks will likely come with riders. Sources say the central bank may bar banks from funding financial sector acquisitions. Banks had sought review of norms to address competition. WeWork's IPO sees a muted opening after being subscribed 0.06 times. CEO and MD Karan Virwani clarifies that the company is squeaky clean and investors' plea alleging disclosure lapses and SEBI inaction won't impact the IPO. Layoffs by TCS are not layoffs but retrenchment, says Harpreet Singh Saluja, president of Nascent Info Tech Employees Senate, after the IT firm allegedly forced 2,500 employees to resign, adding that the employees have not received any support from the state. NDTV Profit's ground check at car dealerships revealed that benefits of buying a new car exceeds that of buying a used vehicle. Sales of new cars increase, aided by GST cuts in festive season, while dealerships of old vehicles see muted sales. Nuvama Wealth Management gets SEBI approval to set up a mutual fund arm and launch schemes including those in specialized investment fund category, allowing the firm to serve a wider base of investors. Good evening. You're watching Profit 360 on NDTV Profit, and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's dive right into it. It's our top focus this evening. SEBI has approved Nuvama Wealth Management's entry into the mutual fund space. Now, this nod allows Nuvama to act as a sponsor and set up its own fund house. However, the company must still complete the final registration process before launching schemes for investors. To understand what this approval means for Nuvama and how it could benefit the company, let's go across to my colleague Vansh, who has all of the details.
So as you rightly mentioned, now the company has received approval from SEBI to act as a sponsor for the proposed Nuvama mutual fund. Now this will enable the company to set up Nuvama mutual fund and will further allow to launch schemes under the mutual fund category, including those similar to the SIF category as well. Now this will further allow the company to enter into a new revenue stream, and the mutual fund will further strengthen the bands in the retail and the institutional investment segment as well. The company can launch various schemes including SIFs offering diverse investment products for the company, and also it will enable them to increase AUM and their client base over time. So they have also joined they will also join other financial players in the high growth mutual fund industry through this as well. So this is how the overall picture is looking like for Nuvama Wealth.
Thanks for that, Vansh. And we also have Anshu Kapoor, President and Head Nuvama Asset Management, joining us this evening. Hi, Anshu. Welcome to NDTV Profit. I'm going to dive right into it. What does receiving this in-principle MF license mean for your firm's journey from an AIF-centric asset manager to a full-spectrum AMC? And give us all the details. When are you going live?
Thank you, Sanjana, for having me on your show. Yes, this is the in-principle approval, and we need to complete a certain set of steps for SEBI to give us the final approval. Hopefully, all of this should be done in the next 6 months, and our internal target is to be able to launch as early as possible. Well, you're right that until now, our asset management has been focused on what you call AIF and PMS products. By its very nature, Sanjana, it is a little restrictive in terms of the number of investors or the kind of investors we could reach. And therefore, mutual fund for us, and especially with the SIF regulation coming from SEBI, it was a natural step for us to move towards the mutual fund license to complete this product suite. And I believe this enhances our ability to bring to investors the kind of innovation and the ideas we already on the AIF platform onto a much simpler and wider accepted mutual fund platform. And we are very excited with this SIF regulatory framework that SEBI has introduced. So maybe our first products will be SIF in nature and then followed with the normal mutual fund kind of products.
Okay, but I'm also curious because, and I'm sure even our viewers are, because in an already crowded MF industry, what unique value proposition will you actually bring to the investors?
Right, Sanjana, that's a natural question and a good question. Yes, there are almost maybe 60 mutual fund providers out there, but the industry is also very large and kind of doubles every 5 years or so in the market. Well, our focus is to bring a lot of new ideas to investors, which investors may not have until now experienced or seen. See, as an asset manager, we will follow the investor needs. And I think there is a need on a lot of product innovation. The regulatory aspect is helping us with this, like I mentioned, the specialized investment funds, where long-short funds or absolute return funds or maybe sector rotation funds. So those funds are not available so far to investors. It's very hard. Until now, they're the premise of the 1 crore minimum investment in the AIF platform. With all of this innovation from the regulatory side happening, we believe there's a lot of potential to offer many of these products to investors at large. And you are aware that Nuvama Wealth Management, through its Nuvama Private and Nuvama Wealth Management, has a large access and reach. And also through a lot of external asset management distribution platform. So it makes it simpler, it makes it convenient, it makes it regulatory kosher, and gives a lot of confidence to investors to access these products which were not available to investors so far.
So then let's delve deeper into that, because given the market chatter around SIFs, that's your specialized investment funds, will Nuvama then prioritize launching products in this category, and how are you viewing the landscape that's evolving in India at the moment?
Yeah. So Sanjana, what's happened is that the talent availability for products which are suited for SIFs is limited. And track record of managers for this product category is also limited in the country. Not many asset managers have the track record, have the size and scale of AUM, have the experience or the talent. Fortunately for Nuvama Asset Management, we've been doing this for the last 4 years since we started our asset management journey. And therefore, we have the track record, we have the team, we have the experience with what works and what doesn't work. And the way we build all these products is to be able to naturally adapt these products and pour these products into a SIF regulatory framework. Our belief is also that this is the first step from the regulator. I think a lot more innovation is possible. See, globally, this nature of products is about 5 to 6% of the long only AUM. So until now, investors had only long only kind of products available to them. We, I think, should be able to bring to them through the SIF platform a lot of innovation where they can manage risk. They can take a little bit more risk if they want to. They can get into absolute return kind of products and many more innovations that a regulator may permit. So I think we believe that it's a natural extension of our capability and therefore this step.
Okay, and before I let you go, your 5 to 10 year plan and more importantly, the break-even timeline and expected capex for scaling the mutual fund business?
Well, it's a little early. Sanjana, we are building the plan as we speak, but I don't see this happening in you may expect that we will ride our existing network and not go very, very widespread with the kind of product set that we will have to begin with. So I think what we will do is launch a limited set of products, see what the investor experience is, see what the demand is, and see what the response is. And then we decide to scale up. So I think it's going to be a graded step up, but we are very excited with the possibility, I must say.
Kapoor, Nuvama Asset Management, thank you so much for joining us and wishing you all the very best as you embark on this new but also at the same time very trusted kind of space. So wish you all the best. Thanks so much for your time.
Thank you, Sanjana.
And let's move on now to how the markets fared today. We saw benchmarks close higher for the second consecutive day, with the Nifty ending near 24,900 and the Sensex bouncing back 500 points from the day's low in a last hour surge. Both the Nifty and the Sensex gained over 1% for the week. Most sectoral indices ended in the green today and all indices ended higher for the week, with PSU Bank and Metal up over 4%. Now on the stock specific front, we saw Tata Steel and Power Grid gaining the most in the Nifty, and the metal rally was mostly led by National Aluminium, gaining over 10% for the week. And it's time now for an NDTV Profit exclusive. Acquisition financing could get the RBI's green light, but with riders. Sources tell NDTV Profit that deals in the financial sector will continue to remain off limits, and my colleague Vishwanath Nair has all of the details.
Yeah, so if you were to look at what the actual monetary policy decision was, I had been saying it since that day, but that was just a sideshow. The main focus was, of course, the norm changes that the Reserve Bank of India is bringing in, 22 specific norm changes. Now, yesterday we did talk about how the regulatory changes came in as far as the large exposure framework, as well as the draft guidelines for NBFC's forms of business, how those came about. What we're telling our viewers today is about acquisition financing. That was one of those key measures that was announced by the regulator, that banks, Indian banks, will be allowed to finance acquisitions by Indian corporates. This is something that they were struggling to do earlier. Earlier, of course, a foreign branch of an Indian bank could still do that. However, domestic lenders were not able to do that, partly because of the large exposure framework, but partly also because the regulator was not in favor of allowing leveraged buyouts in India. So now, of course, it seems that things have eased up. What we are learning from our sources is that this was actually led by banks going to the RBI and lobbying for the rights, because they were seeing that their key corporate clientele was going towards private credit, and private credit competition and the intensity of the competition was too much, and banks were seeking a way to get into this space so that they could also start lending towards good quality, high pedigree clients wherever they needed any kind of financing for acquisitions. Of course, guardrails still exist. What the new norms are likely to see are very strong guardrails in place so that banks don't over leverage themselves. They also will have to follow internal lending norms. Remember that a bank is only allowed to lend up to 20% of their capital base towards a single corporate. So that will still apply. When it comes to investments, that number goes up to 40%, but that's inclusive of the 20% in lending. So you have an upper limit on the investment side as well. So even if they want to structure a deal with some amount of investment into the corporate rather than just a direct loan, they can do that, but those will be within specific rules so that Indian banking system is not ending up too exposed to a key corporate buying out its competitor.
Thanks so much for that, Vishwanath. And let's move on. WeWork's most awaited 3,000 crore rupee IPO opened today for subscription. The IPO is a complete offer for sale of 4.63 crore shares with no fresh equity being issued. But the initial response to the IPO has been rather muted, recording a total subscription rate of just 0.03 times as of 4 o'clock this evening. Now, remember, WeWork has found itself in the middle of a legal tussle after an investor dragged the company to the Bombay High Court, alleging that it concealed key risks in its IPO filings and further claimed that SEBI ignored his warnings. Now, when we put this question to Karan Virwani, MD and CEO of WeWork India, about whether the court case could cast a shadow on the IPO, he's dismissed the allegations as a publicity stunt, stressing that the company remains squeaky clean. Let's hear what he told my colleague Hiral Dadia.
We've just gotten a story wherein an investor has flagged disclosure lapses and there is SEBI inaction is what they've indicated. The hearing continues in the Bombay High Court as we speak right now.
Yeah.
What is it that you would have to say? Because the allegation is on material non-disclosures and regulatory inaction, misleading statements and significant omissions. And it says concealment of a criminal charge sheet against promoters. What would you want to tell investors?
I mean, all I would say is that we've been through the most extensive approval process when it comes to SEBI. We have disclosed not just what we needed to from a regulatory or law perspective, but we've actually gone over and above that to disclose. And you know, this is really like some pressure tactics that we have from, you know, certain business that has an issue, not just actually not with WeWork, with the Embassy REIT, which is where, you know, this issue has come up. And just because we're going IPO, they think that, you know, by doing this at a vulnerable position is going to have some impact on us. It's not. As a company and as WeWork, we are the squeakiest clean type of organization.
So what's your argument to it in the court right now? Because I know, I mean, there is an advocate who is representing WeWorks as well. So what is the argument that you have, number one?
There's no argument. We've made all the disclosures that we need to. And, you know, SEBI has gone through its process and given us the approval. And
so if anything negative comes out of this in terms of the hearing, is there a possibility that they could stall the IPO?
No, we don't see anything negative coming out of this. This is just a way to have some bad publicity or like pressurize us, which is not going to happen. And we are in a great place. We're very confident about the business, the growth, and we've done everything that we needed to do.
WeWork CEO maintaining that the company has a squeaky clean image. Remains to be seen how that case actually plays out in the Bombay High Court. Let's move on now. The Nascent Information Technology Employees Senate has taken a bold stand. They've written to Maharashtra's Chief Minister Devendra Fadnavis, alleging that layoffs at TCS. Now, the union claims that nearly 2,500 employees, including many with decades of service, are being coerced into resigning under pressure. All of this, though, TCS has denied these accusations. TCS has stated that no such layoffs have taken place and has emphasized its commitment to employee welfare. My colleague Puneet now joining us with all of the details. Puneet, over to you.
There has been a couple of key updates coming in from Knights, and they've written, as you rightly said, to the CM. Now, this comes after there has been some reports speculating further layoffs at TCS. Now, it's important to note that they already laid off roughly about 12,000 people, or 2% of the workforce in July. This letter is dated as of July of 22nd, and post that as well. Now we're starting to see a lot more coming out of TCS's Pune campus as well. Now, roughly 2,500 employees have been essentially forced to resign, is what this letter says. Apart from that, the affected employees are also in the mid to senior level, where the experience is also quite high, between 10 to 20 years of service. And essentially the point is that this termination actually violates the Industrial Dispute Act of 1947, which is there's no notice or compensation provided. So this is largely what the letter is stating as well, but a lot more conversation with Knights as to what has been the key issue, and this will follow up into TCS's earnings as well, which is scheduled on October 9. So a lot more to talk about then with the company as well.
Thanks for that, Puneet. And we also caught up with Harpreet Singh Saluja, the president of Nascent Information Technology Employees Senate, also known as Knights, on his take on this as well, and also on TCS being one of the companies that applies for the most H-1Bs for its employees. Let's listen in.
In US also, the letter that I have read from the United States Senate, they have clearly questioned TCS that why you are removing our employees in the particular location, and then you are going and applying for H-1B visa. You are the second highest in the US for the approval of visa applications, H-1B visa applications. So how come you are removing the employees at the same time you are declaring layoffs, that we are worldwide, we are removing employees from the organization, and at the same time you are the highest, second highest, company that has been applying for the visa. So that question comes to Indian prospect also. The situation is very clear that they are removing and targeting the mid-level management employees who have given certain amount of time to the company, who have spent a lot of time with the company, and suddenly and abruptly you take a decision in the month of July that no, we are not capable of handling such kind of workforce, and we are going to remove the workforce in the name of restructuring. That is not restructuring. This is unethical and illegal layoffs and retrenchment.
Now, India's auto sector turned out to be resilient in September, with 7 out of 10 major OEMs beating or meeting sales forecasts. This was mostly fueled by festive demand and GST 2.0 benefits. Winners included Hero MotoCorp, Bajaj Auto, Tata Motors, Hyundai and Escorts Kubota. While auto majors like Mahindra & Mahindra and Ashok Leyland hit targets exactly, the top laggards were TVS Motor, Eicher Motors and Maruti Suzuki. But overall, SUVs and two-wheelers led the gains, signaling a strong festive kickoff despite monsoon lags. Through an NDTV Profit ground check that revealed that the car dealerships are seeing higher demand for new vehicles compared to old or pre-owned one. Let's now take a look at this report sent by my colleague Charu Singh on the auto demand this festive season.
The Indian buyer seems to be in store for a lot of benefits, especially if they are interested in buying an automobile or a car or a vehicle. What is happening right now is that India is seeing GST rate rationalization benefits. That means that some cuts and some price cuts have been extended to the Indian consumers. Apart from that, there is a festive season of Navratri, Durga Puja, Dashera, and also we are looking ahead for a Diwali week, and several discounts and favorable schemes for the buyers are in place. As per several conversations that we held with car dealerships in Prabhadevi, Dadar, as well as in Chembur, we got to know of two different pictures. Firstly, of used car dealers, they told us that the footfall has not really increased because now benefits of buying a new car have superseded those of buying an older one. That means that with the budget that people had to buy an older one, they can now usually be able to afford a new one as well. But the new car dealers told us that more and more people are inquiring about the price benefits they are getting because of the festive season. More and more people are coming into the store. At least 25 to 30% increase in footfall has been seen, and more percentage of an increase is expected in the Diwali week coming ahead.
Thanks for that, Charu. And let's move on. The government has now taken a big step towards regulating India's fast-growing online gaming sector. The Ministry of Electronics and IT has released draft rules under the proposed Online Gaming Act 2025. Now, the rules call for setting up a new regulator, the Online Gaming Authority of India. What will this authority do? It will oversee registrations and licensing for game providers. Companies will now need to register their games for a 5-year term, after which a renewal will be required. Oversight has also been split, with esports coming under the Sports Ministry and social or casual games under the Information and Broadcasting Ministry. Now, these draft rules aim to bring more accountability and structure to the online gaming ecosystem. And let's quickly take you through the press conference happening right now with the Ministry of External Affairs.
Both sides are committed. We look forward to strengthening our economic ties, as you pointed out, and we look forward to further building on our ties with Russia. Abhishek, on your question, you would have seen that the UN Security Council Committee, they have given an exemption for the Foreign Minister to travel to New Delhi. Raghavendra, on energy sourcing, our position is very clear as to what is our broad approach, and I have been talking about it on several occasions. So I would refer you to my comments made in that regard. On the oil tanker, I think you will have to. I have also seen reports on this. You will have to take your question to people, the authorities who are involved in it. So they will be in a better position to answer your question. Kadambani, आपका सवाल अफगानिस्तान के अंतरिम सरकार के जो विदेश मंत्री है उनको लेके है। जैसा कि मैंने कहा, उनको इजाज़त दी गई है सुरक्षा परिषद के कमेटी द्वारा नई दिल्ली की यात्रा करने के लिए, और इस मामले में जब भी मेरे पास और कुछ कहने को होगा आपको बताने के लिए होगा।
And that was Randhir Jaiswal there making a very crucial comment, talking about valuing India and Russia's ties. Now, this is particularly important coming after President Vladimir Putin's comments lashing out at Donald Trump, insisting that India's purchase of Russian oil was purely economic. Let's listen in.
So for the United States, the benefit is not obvious, and for the countries against which the threat was voiced, like for India, if India stops buying our energy, damage will be inflicted upon them, like to $9 to $10 billion if they decline to buy energy from us. If not, high duties will be imposed on them, and once again, damage will be there. Well, the same amount of damage, and why then decline to buy Russian energy to actually sustain political risks? And the Indian people will look at what decisions are made by the political leadership and never accept any humiliation before anyone. And also I know Prime Minister Modi, he will never take any steps of the kind. So economy-wise, there is no point in it.
Vladimir Putin there standing up against Donald Trump when it comes to India's purchase of Russian oil. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone will say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Hello and welcome to KYC. This is Hiral and with me is Varsha Chandani. Clearly, you know, the show is meant for someone who really wants to look at a company from an investment perspective, and a long-term investment is what you should be thinking about. One company which is in focus on the back of everything that's happening, on the back of the weather in the country. The flu season is on, and that's where hospitals come into focus. Jupiter Hospitals is what we're talking about on this show. Let's quickly first understand what are the key questions that we are actually going to ask the management on the back of responses that we should be getting. First up, the company has been seeing a high depreciation. Now, the kind of impact it could have on its profitability growth on the back of the high depreciation is the first thing. Secondly, when you talk about their greenfield projects, there are 3 of them that they're looking at. What are the kind of timelines that the company is looking at in terms of launch? Their target EBITDA margins is the next big question over the next 3 years, because that will actually tell you what's the operational efficiency when it comes to this company. and the growth in the average revenue per occupied bed. What is that expectation going to look like? Are they expecting growth or will it remain stable at current levels, Varsha?
Well, on my list, I would want to know what is the sustainable debt levels that a company will have considering expansions, because recently they've added more debt. Number 2 is the total number of beds that they want to add, plus what is the capex that they are expecting over the next 2 years. And lastly, I would also want to know the revenue growth which the company is expecting over the next 2 years. So these are 3 questions on my radar.
Interesting ones, I think, that we will ask the management. But first up, let's understand all about Jupiter Life. Now, it's a multi-speciality healthcare provider and it mainly operates in the Mumbai metropolitan region and the western region. Currently, around 3 hospitals is what they have, with a total bed capacity of around 2,500 beds.
Well, you know, when we talk about hospitals, the main metric that we want to know is ARPOB, that is average revenue per occupied bed. For this company, it stands at around 67,300 rupees. Now, if you see over the years from FY22 to Q1 FY26, ARPOB has increased in a decent way, and that is actually important. So, we would want to know what is the sustainable growth in ARPOB that the company is eyeing over the next few years. And also, you know, so overall, so the 60, so as of FY25, if you see, ARPOB stands at around 60,600. And a healthy growth, about 6-7% is what one should expect when it comes to ARPOB.
With this, the next important factor becomes your occupancy, because until and unless the occupancy is strong, you will never see that ARPOB improve as well. But now what's happened is your occupancy has declined by around 380 basis points. The reason for this is the new bed additions that the company has done, and that's the reason why you've seen that decline happening. But from a 54, it's actually gone up to 65.3% in FY25, which is absolutely encouraging. So that is a good number to sit with, because you're seeing improvement that's happening on the occupancy levels as well, Varsha.
Now, you know, the main aspect when it comes to hospitals right now is the expansion. Every hospital is actually expanding when it comes to greenfield and brownfield. For Jupiter, if I were to talk about, 3 new hospitals are expected. One is Dombivli, where they're expecting 500 beds, 500 crore of capex is what they're going to spend, and it is expected to be operational by Q1 FY27. Then we have, you know, Pune Hospital also, wherein the operation is expected by, you know, calendar year 28, wherein they're going to invest 500 crore. And lastly, if I were to talk about their Meera Bhayandar Hospital, again, the approvals are underway, operations are expected by, you know, calendar year 29. So overall, 3 greenfield projects that they are expecting over the next few years.
Interesting. Let's now decode Jupiter Life. All the factors that we will be considering over here, we're looking at the income statement. That is something that is going to be checked. The balance sheet, cash flows and return ratios. These are the top 4 parameters. Apart from these, you have the shareholding, street credentials, valuations, and the street coverage with outlook are the 8 parameters that we're looking at. But first up, when you talk about the income statement, let's understand, you know, if you have to talk about the first quarter of FY26, clearly the impact was led by higher interest cost and depreciation, and hence we're asking that question to the management. The revenues, a 3-year compounded growth of around 19% is what they've seen. EBITDA also around 24%. Profits 56% in terms of the compounded growth, and hence a thumbs up, because over the last 3 years, the profit growth has been aided by higher other income. The higher growth that has come in from FY23 to 24 has been led by, again, a higher income and lower tax towards interest cost. The companies had higher interest cost in FY22 and FY23, and this reduced in FY24 and 25, and the debt in FY24 actually came down to 0, and hence we've given it a thumbs up.
Now, you know, talking about balance sheet, now overall we have given a thumbs up. If you see the borrowings as of FY25, stand at around 321 crore. But the company has almost 600 crores of cash as of Q1 FY26. So overall, on a net debt level, if you see, it's zero. Now, one of the reasons why we have given the thumbs up, and though the gross debt, if you see, is around 321 crores, this is the new debt that the company has taken because of the expansion that they are doing. So overall, a healthy balance sheet would, I would say, considering the cash sitting almost 600 crore as of Q1 FY26.
And that takes us to the cash flows, which is also healthy, and hence a thumbs up, because your overall cash flow from operations has remained healthy. Your net cash flow has been negative in FY24, but that's mainly on the back of investing items. And when you talk about FY25, the net cash flow at around 345 crores is due to the cash flow for borrowings being positive, and the ratings given is on the back of the healthy cash flow, mainly from operations. So that's the reason why a thumbs up on this aspect.
Talking about return ratio, so overall, if you see the chart, except FY25, the return ratios, ROCs have been healthy at 21-22%. The reason you are seeing dip in FY25 are because of two reasons. One is, of course, some pressure in profitability, and the company investing a lot. So there's been huge capex that the company has done. That's why the ratios are depressed. And the other reason is because of huge cash sitting on your balance sheet will also depress your return ratios. So overall, these are the two reasons why you're seeing 17% of ROC, and one of the reasons why we have given a neutral rating when it comes to ratios.
Okay, so that's return ratios, which is a neutral rating. Let's shift focus to the shareholding pattern. It's very interesting because overall, your promoters have absolutely remained stable in the last 3 to 4 years. Your FIs did see an increase. In fact, from a 4.17, they've gone up to 10. A minor sell has happened, and that number is at 9.77% in FY25, but it's almost the double of what they were in the March quarter of FY24. DIs as well have steadily increased a small portion from 14 to 15.82 is what you're looking at in terms of the DIs, and the public has also remained pretty okay. It's gone down though. Your free float has actually gone down from 40.76 to a 33.51, but a lot of promise from FIs and DIs, and hence a thumbs up.
While, on the contrary, Hiral, the street cred, if you see, we have given a thumbs down because the company has not given much returns to their shareholders. In last 1 month, the stock is the stock is up only 4%, while in last 6 months it's down 2.6%. Rather, in last 1 year, if you see, the stock has given only 7% to its investors. While if I were to talk about longer term also, in last 5 years, or rather since when the company has been listed, the stock is up only 42%. This is from 2023. So overall, a thumbs down, when it comes to the returns that the company has given to its investors.
Okay, so that's with regards to where the street credentials go. Let's look at valuations now. You can say that the stock is not very expensive and is not very cheap as well, because if you have to compare it to your peers, it's sitting somewhere in between. Narayan Hrudayalaya is the only one which is the cheapest out of the 4 that we've mentioned, and this is taking into consideration FY26. If you have to look at FY27 as well, a similar scenario is what you're seeing. Around 39 times is where Jupiter Life is, where Narayan continues to be the cheapest one, and you have Kim's and Globus, which are Global Health, which are still more expensive as compared to a Jupiter Life. In fact, even the other ones, from an Apollo Hospital to a Fortis to a Max Healthcare, it seems this is pretty much in between. And if you have to compare a Jupiter Life to a 3-year average as well, it's somewhere in between to the mid, to that range. So again, a neutral rating with the way it's sitting at.
Well, talking about analyst recommendation and outlook, so 6 analysts have rated buy. Well, the potential lies at almost 14%. On the outlook, company is expecting organic growth to continue when it comes to, Pune and Indore with new beds and of course ramp up in those areas. And most growth will come from Pune, Indore until the Dombivli hospital comes online, and the ramp up of Dombivli, if you see, and the other hospital will be the key metrics to watch out. Lastly, if you see, increased depreciation and finance costs will actually have some pressure on PAT margin. So because of this, we have given a neutral rating, when it comes to analyst recommendation and outlook for the company.
Okay, so that's the overall. Let's look at what the picture looks like from here on Know Your Company. First up, 3 greens: income statement, balance sheet, cash flow, a neutral in return ratios. And if you have to talk about shareholding, again, it's 1 green. Street credentials is a thumbs down, and your valuations and street coverage and outlook are a neutral, which takes you to a 5.5 on 8, which is also a good rating so far. But let's get in. Ankit Thakkar, MD and CEO of Jupiter Lifeline Hospitals. Ankit, welcome to the show, and always a pleasure to speak to you at NDTV Profit. We have these 5 or 6 key questions that we want you to talk about. First up, the interest and depreciation cost has been absolutely high, and that is what is impacting margins and profitability. How are you seeing the impact in FY26? And are you seeing that impact recede over the next couple of years? What is that trajectory going to look like?
Good morning. So, on the interest and depreciation side, I think you should expect the numbers to continue to look high over the next couple of years. We are currently in a serious capex mode. We are putting up 3 new greenfield hospitals as we speak. The first one is in Dombivli, which is 500 beds, which will come up first quarter of next financial year. Then another 500 bedder in Pune and a 300 odd bedder in Mira Road in the MMR region. So over the next 2 or 3 years, there will be serious capex, and all of that will lead to increased depreciation in the times to come. On the interest side, we have currently, we are still net cash, but we have some debt on the book in anticipation of the 7th Greenfield project as well, which currently we haven't signed, but we are negotiating a few things. So if that comes up, then the 7th hospital may be partially debt funded, and that will also give rise to some interest component. While we have been debt free for the last couple of years, but going forward, we may have some debt on the balance sheet.
So Ankit, then what does this do to your profitability and to your margins over the next few years? Are you seeing any dip, or you think they will remain stable at current levels?
So I look at it, when you analyze the operations, I look at it more at the EBITDA level, which is more reflective of the strength of the operations. So on the unit EBITDA levels of the current operating hospitals, that is Thane, Pune and Indore, we don't expect any impact or dips. Indore, on the contrary, should grow and improve upon margins a little bit. But as the new hospitals come up, each hospital, would take a year or 2 to mature. So I would forecast maybe the first year to be slightly negative at the EBITDA level for each new hospital that comes up. The second could be neutral, and the third onwards, it starts contributing a little. So we are in this growth cycle, and therefore, the below EBITDA line items are expected to be higher than what they were.
Hi, Mr. Thakkar. Varsha, this side. Pleasure to have you at NDTV Profit. Mr. Thakkar, the occupancy, if you see, dipped in Q1, of course, because of the addition of new beds. How long do you expect the ramp up, or when do you expect the occupancy to reach at the peak optimum level, and what would be that level be?
So the peak levels generally for all the hospitals should be somewhere in the mid 70% of occupancy. Thane is already there. Pune is close. It is in high 60s. I think the next year also it should pretty much get saturated. Indore, you see a significant percentage dip in occupancy because of an expanded base. Like you pointed out, we have added close to 100 beds in Indore. So while on the absolute terms, the occupancy continues to rise, but on the percentage terms, you do see some dilution there. Again, we believe that in the next year also, once these occupancy numbers cross 60-65%, we have one more round of expansion possible in Indore. So we may add a few more beds in Indore, and then that will be the last of organic expansion as far as Indore is concerned.
Okay, so that's the overall expansion plan and what occupancy could look like. To add to this, let's talk about the average revenue per occupied bed. A good number that we've seen so far, I think if I'm not mistaken, in double digits as well. Is this something which is going to be sustainable, taking the kind of competition that is coming in at play in the MMR region? Because a lot of other hospitals, in fact, majority of them are on an expansion spree as well.
Well, I think, and I have always maintained this, if you want to extrapolate the RPOP number, I think it is the safest to extrapolate it to grow in line with inflation. Anything beyond that, I would not guide or recommend you to build into your model. As far as, the growth in beds is concerned, I think it is still a lot to do with demand, a lot to do with unmet need. So I would not attribute the growth or the lack of growth in RPOP to competition, but I would attribute it more in terms to reality, which is that we are at an optimal pricing level. And like for all other things in life, inflation is a reality. The inflation is a reality for healthcare costs. So to that extent, RPOPs will grow.
And also, Mr. Thakur, considering the expansion that you're doing, what would be the sustainable debt level, for at least next 2 years?
So the expansion which is currently underway, that is our journey from 3 to 6 hospitals, we are doubling our size. That will be completed free of any debt. So technically we should be able to complete this round of expansion with the cash reserves that we hold on our books and the internal accruals that we will generate over the next couple of years. The debt is going to be used if we do the 7th project. So the 7th project then will be debt funded, and that will probably sit on the book for some time.
Okay. From here on, in terms of the capex that goes as well, we're talking about the expansion right now. How significant is the upcoming capex going to look like? Because the ones which are in the pipeline, everyone is aware of that. But if you have to look at any further additions, the 7th hospital you said probably could be funded through debt. What is that capex going to look like post that?
So depending on the land and location that we eventually finalize, our one thing that I can assure you and your viewers is that we are not changing our broad philosophy. That is, we are looking at a greenfield project, we are looking at Western India, and we are looking at the size of 3 to 500 bed scale. So within these parameters, depending on the land, location, etc., that we do finalize, we will be able to give you a better sense of what the capex will look like. But X of land, I think pretty much everything else remains the same. That is, we should see the project come up at anything between 1 crore and half per bed.
So Ankit, to take that expansion into consideration, what are the high growth specialities that Jupiter Lifeline could focus on? And currently, any percentage of your revenues that come in from high growth specialities? And do you see any opportunities lying there?
So honestly, we don't really track specialties as high growth, high margin, all of that. See ourselves more as, community comprehensive health providers. We do everything from childbirth, going up to, cancer, organ transplants, all of that. I think it is not very wise in healthcare to really hair split these numbers and look at, a PNL at branch level or specialty level. We don't consume that data even internally, because I don't believe that there is any actionable insight that can come from that data. So, for example, if I learned that gastroenterology, for example, I'm just throwing something, is a low margin business, what am I going to do? I'm not going to shut it down. We don't look at those numbers because we don't think those are actionable numbers.
Thakkar, just wanted to have, so we are clear when it comes to EBITDA margins, but what kind of revenue growth are you expecting considering the expansions that you are going into, the revenue growth expected for the next 2 years?
So next year, with Dombivli coming in, that should add to the revenue on the consolidated level. Pune is maybe 2 or little more than 2 years away, so that will not figure into your 2-year projection. Thana should grow in line with inflation on the pricing front because the occupancy is pretty much matured. Pune also has a little bit of occupancy growth, so it can grow higher than inflation. And Indore has 3 levers besides pricing, occupancy. It also has a third lever of criticality of procedures or case mix optimization. So Indore should show the fastest growth of the 3.
Ankit, in the end, investors want to know what the return ratios are going to look like because you did a peak of 22% on a ROCE in FY23. When do you come back to that number? How long will it take you? And anything beyond that you're targeting?
I think you are the expert in that, and I think
no, but I'm sure. I think an investor would want to hear from the horse's mouth because that is, something that will probably stick by.
Absolutely. So from the horse's mouth, I think what I very strongly believe is that I should do what I am good at, and I should do my job rather than somebody else's, which is to do 2 things. A, continue to run the existing hospitals well, efficiently, and in the best interest of the patient so that we continue our operations well. And 2, make sound capex decisions for the future growth. So on that front, guidance from me can be limited to what we are planning to do next. We are planning to build 3 more hospitals and double up our capacity. You can, make an educated guess what double capacity can translate into in terms of financial performance. We can make sure that our capital allocation is not out of whack. We spend right amount of money. We don't overpay for things, and we are efficient in terms of capital employed. Eventually, that has to translate into returns if run efficiently. But I don't like making predictions on numbers. I rather like
predictions on performance, I think. Thank you, Ankit, so much for joining us on the show. And that's Ankit Thakkar clearly telling you as to what could be in store from here on. But very quickly, any key takeaways, Varsha, on this?
Yes, surely. So over the next 2 years, what he said was because of the depreciation, high depreciation, there's going to be some pressure when it comes to PAT. Number 2, the peak occupancy level is expected at 70%. Soon they're going to they're going to reach at that 70%. And lastly, the ARPOB growth is expected or will be in line with the inflation. So
and they're going to take care of the returns to the investors as well. But thank you so much, for joining us on the show. To this, and that's all that we have on this edition of Know Your Company, only on NDTV Profit for your profit.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone will say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in. Where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI?
When it comes to money and investment decisions, seeking advice is quite common, whether it is from your neighbor or the veteran stock picker. I think that has to do with the need for validation. You want to know what you're doing is right and you want someone else to tell you that it is. But often people tend to run after bad advice instead of listening to the words that they need to. And that's not a new concept. Poet Saint Kabir has written a number of couplets or dohas about a variety of things, and one of them has to do with this. He says, people aren't interested in the truth. Rather, they fall prey to all the tall claims out there. It's akin to the milk seller who has to walk down the streets to sell something that is good for you, while the alcohol seller can sit comfortably with everyone flocking to him. It doesn't sound as beautiful as it does in Kabir's words. This is MoneyWise, and I'm Alex Matthew, and on this episode, my guest brings you Kabir's wisdom and also Rahim's wisdom and how that can relate to your financial decision making. Vinayak Sapre, who's a financial coach and author, is joining me now.
Hi.
Vinayak, thanks so much for taking the time.
Thank you so much, Alex.
Like
for
I said,
having me here.
I paraphrased, and I paraphrased heavily. Let me hear the actual words.
Okay, so Kabir says that Sache koi na pati jai, jhoote jagpati aaye. Means people are not interested in the truth. Jhoote jagpati aaye. So they are more interested in somebody who is talking more exciting things. Gali gali goras fire, madira baithi bikaye. It's akin to that the milkman, as you said, he's walking down the street to sell milk, whereas the alcohol seller, people are flocking on to the alcohol shop to buy the alcohol.
It's so beautiful, right? And you've read Kabir's work extensively, Rahim's work extensively. You've even written a book about it.
Yes.
It's called Dohanomics. Yeah. And you've tried to get that wisdom and pass it on to people and tell them that even their financial decision making can benefit from this wisdom.
True.
What drew you to that? Is this something that you looked at much earlier in your life and you said that this is relevant?
Yes. So one is I'm born and brought up in Varanasi, so Kabir is in the blood. Okay. Secondly, since I have spent enough number of years in financial services, and what I realized during that period, especially whilst working with AMC, is that the communication was an issue. The concept of mutual funds or the concept of personal finance is a fantastic thing, but the way we have been communicating with people, to the laymen, the investors who need these concepts, the communication was an issue because it was very jargonized. I thought I need to simplify it. I need to Indianize it, and I need to change it into the language people understand the best. And that's where the idea of reaching out to Sant Kabir and Rahim got into my head, and I said a large portion of the country, as in a big chunk, the population of the country, they have read Kabir and Rahim in their school days. And the beauty of these duhas, because both these saints, they were great observants. What was happening in this society, and they kind of gave the message that how to conduct yourself in daily life. And I thought that the messages are can be linked to the investment, because as the psychologists also say, the behavioral economics also suggests that people make money or lose money largely because of their behavior with the money. Yes. So how do you behave with your money? That will decide whether you will become a successful investor or happy investor or not.
So the reason why I chose to start with that, and we were speaking before today, and the reason why we're doing this today is because I was so taken by what you were describing that I thought that my viewers would also benefit from it. But we're speaking at a time when, if you look at the Nifty 50, just as an indication of how the market has done over the last several years, then if you look at a little over 400 days now, and you do a point to point and you calculate the change, it's pretty much flat. So a lot of people that got advice to go whole hog into equities and went into the broader markets and invested in sectoral and thematic funds, they're seeing now some of that bad advice come into play. How much of this is setting your expectations and then sticking to it?
Yeah, very important question. Thanks for asking this. What has happened is, in fact, in the last 10-15 years, we can divide into two parts. That is pre-pandemic era and post-pandemic era. What has happened is, post-pandemic, all of a sudden the market started going up, and during that period, people who came into the market, they made humongous return.
Yes.
Much more than what they would have otherwise expected. And that's where people start thinking that they have become expert and they can generate these kind of returns. But the fact is, such returns are not sustainable. Secondly, if you are coming with the thought that stock market will never go down, people need to understand that it goes through a lot of volatility. Market is supposed to be volatile in nature. And why only 400 days? In the past, we have seen market has given negative returns for 3 years also.
Yes.
And that's where if you set the expectations right from the day one, that the expectation has to be rational in nature. So when the market goes down, you don't feel bad or you don't get jittery. And that's why Rahim says that, and you don't need to take too much of action. What happens is, when market starts going down, people start moving out. It should be other way around. That when the market is going down, that's a good time to buy, not to exit.
Yeah.
Right. So that's where Rahim says that. So my point as a market expert or an observer of the market, I can say that if you can't buy that at that point in time when the market is falling, but you need to stay calm.
Okay, so, but what does Rahim say?
So Rahim says, Rahiman चुप हवे बैठिए देखी दिनन को फिर जब नीके दिन आई है बनत न लगी है देर.
Okay.
So you don't need to take action on everything because like stock market, life is also it goes through lots of ups and downs. You need to observe what is happening. You don't need to take too much of action.
So let's take it line by line for those people that aren't well versed with the language.
So Rahiman chup have बैठिए. It means stay calm, stay put. Don't do anything. देखी दिनन को फिर. So keep watching, keep observing what is happening. Don't feel anxious, don't get jittery. जब नीके दिन आई है, नीके means अच्छे, good. So when the good days will come, बनत न लगी है there. It won't take time to change. You know, your fortune will change like overnight also it may change in very fast pace, then you can expect.
And it's so true because if you think about the market cycles that we've seen, and generally you talk about 3.5, 4 year cycles even.
Yeah.
But those cycles seemingly are getting scrunched. The time that they're taking to turn this way and that way are reducing in duration. Are you experiencing that as well?
Yes. So, and that's where if you have the patience, if you show the patience without taking too much of action, what happens is that the volatility gets even out over a period of time. So longer the period, that the volatility which you see in short period, which looks very sharp, very startling, over a period of time, it looks like a blip.
Yeah.
So
actually, to the point on SIP returns over the course of this last 1 year or 400 plus days, if people had continued with their SIPs, and we spoke about this in January, February this year, when the broader markets had fallen by 20% by February end, and then the recovery of 20% took place after that, and people who got out when the market had fallen by that 20% did not get to experience the very sharp rebound that came through after that as well. So though the point-to-point return for the benchmark will be more or less flat, there are chances that people who have deployed at the lower levels have actually made money.
Absolutely. And that's where, especially when you are a long-term investor, if you are a SIP investor, it makes sense to keep buying at different levels. And so if I have to give some example, so for example, September 99 to 2002, that was the period when there was total lull in the market.
Yeah.
Market fell down,
dot-com
burst happened. And suppose if you have been you were doing SIP in say Sensex only, and after 3 years the SIP return was negative. I'm talking about a return in Sensex. I mean investing in Sensex. It was around -4 point something. But if you continued for another 2 years, that number turns into magical some 17-18%.
Right.
From -4% to 18%. The beauty is, though the returns have gone up by almost four times or 5 times, the Sensex level, which was around 3,300 in December 2002, was approximately 6,600 in 2004 December. So it went up by 2 times, but your return went up by more than 4 times.
Because you use the time to accumulate units.
Yeah. So people call it rupee cost averaging.
Yes.
I call it unsung hero because it is least talked about the feature of an SIP.
So, but a lot of this has to do with what the crowd is doing. And there are so many great examples of this, even if we look at the stock market today, right? You see a stock that has gone up, say, 40, 50, 60%. And invariably, a lot of retail investors are the last to jump onto that bus. And as a result of which, when it starts coming down, they lose money, whereas everybody else has gotten off at that point. Yeah. I mean, we speak about herd mentality quite a bit. Yeah. What do the saints say about it?
So Kabir said that mood mudaye hari mile har koi leo mudaye. Bar bar ke mood se bhed na baikunt jaye.
Okay.
That by shaving your head, if you are going to attain moksha, then everybody should shave their head.
Right.
But the sheep which gets shaved every year, does she go to the Vaikunt or she attains moksha? Answer to that question is no.
Yes.
Similarly, and this is the most common mistake people make across the world, is the following the herd. And this is a typical trait of a retail investor. So retail investors come into the market when there is, it is overhyped, when everybody talks about that, okay, this will go to whatever level they are talking about, and then they think that, okay, I have missed the bus. Now I need to catch up.
Yes.
And the expectations again that probably in 6 months' time I'll double my money, or 3 times double my money, 3 months double my money, and a lot is because of the so-called influencers who keep talking about how to make quick money in short period of time.
Yeah. So that is true, and in fact, it goes back to the first point that we were talking about, which is setting your expectations. There's nothing wrong with a 12 to 14% compounded annual growth rate over the course of 10 to 20 years.
Absolutely.
Because ultimately, we're talking about 14, 15% every 6 years or so.
Yeah.
5, 6 years, you are doubling your money.
Yes. And secondly, to keep it very simple, I suggest people to look at one is inflation plus 5% expectation. What is your objective of investing? To beat the inflation.
Correct.
Primarily to beat the inflation.
Yeah.
So inflation plus 5% over a period of time. It will not happen on day basis, but over a longer period of time, inflation plus 5%, or say nominal GDP plus 5%. That is good enough expectation from the market.
Okay. Now, there is also this concept of ignoring liquidity, and this happens when, again, kind of like what people experience when they go whole hog into equity, and they have very little to deploy when the market falls. In fact, this was a bit of a meme that was playing out on social media. Buy the dip, but with what money? Ultimately, right? So because people had already deployed, they thought that the bottom had been found at 10%, but the market fell another 10%.
Yes.
Is there something here as well?
Yeah. So most important thing is people need to maintain liquidity for a variety of reasons. One of them, the most important in today's world, is there has been a lot of layoffs happening. So that's the reason one needs to maintain the liquidity, and in the financial planning terms it is called as contingency planning.
Yes.
So Rahim says, Rahiman nij sampatti bina ko na vipati sahay, bin pani jo jalaj ko nahi ravi sake bachaye. It means that cash is the king, we say in English, right? So if you have
Indians
money,
have been saying that for a long time.
yeah.
It seems.
So he says that you need to have hard cash in your hand, because any casualty or any emergency, it comes without
warning,
right? It doesn't come by yes. So it comes without warning, and bin pani jo jalaj ko. So lotus, right? So if there is no water underneath the lotus, it will, because of the heat, or because of the heat of the sun or the rays, it won't be able to survive. So similarly, for an investor, it is very, very important that he or she should maintain the liquidity in the portfolio, at least 3 to 6 months of household expense.
So And look, we've spoken about this as well, but 3 to 6 months in your contingency fund, that is very hard for a lot of people to do, and often the advice that comes from financial advisors like yourself are to build it over a period of time, but to prioritize that first when you're starting out, because that's the best thing to do. It gets you in the saving habit. But beyond that, my question to you is, we're also talking about at the portfolio level, because people tend to gravitate towards creating a physical asset very early in their career. They're willing to take on that mortgage because ultimately a lot of people have told them, hey, you need to buy a house, you need to go and you need to create a physical asset, even when they're not necessarily ready for it. What advice would you have here?
So again, very important question, very relevant in today's context. People have this habit of buying physical asset a lot, or insurance policies, the endowment policies, the traditional policies, where people get stuck in case of any emergency. Because if you have taken the loan, or if you have bought such policies, no matter how the financial condition is, you'll have to pay the EMI, or you'll have to pay those premiums, hefty premiums. And that's where it is important. And I always say that you should be hoping for the best, but you should be ready for the worst when you are investing, right? And the liquidity is the paramount. It should be the most important aspect of your portfolio construction, that God forbid if anything goes wrong, and if you are exposed to real assets, then it would become very, very difficult for you to run the show.
So what is a thumb rule? See, and it's difficult to do that because everybody's risk-taking ability is different, but there needs to be some ground rule about the amount of liquidity that you should have available to you. For example, in COVID-19, when the markets crashed, those people that had ready available money to invest benefited because they bought Nifty 50 at 7,000 odd points. And then in the span of 2-3 years, it tripled from that. So, but if you don't have that money to begin with, it can't come from thin air.
Yes. So that's precisely the reason that whether it is casualty or whether it is the opportunity, you need to have cash in hand.
So what's the rule though?
So a rule, I don't follow any thumb rule as such, but typically say 15 to 20% of your total net income, as in the CTC.
Annual CTC?
No. So total 15 to 20% of your take home, not more than 15-20% should go into real assets. Because why I'm saying this, because typically any youngster today, people who are in their age group of say 30-35 or between 30 to 40, more than 40% of the expenses are towards lifestyle expense.
Yes.
Right. And when I'm saying lifestyle expense, that includes sending kids to school. Right. So and that becomes necessity, that you can't avoid those expenses. In that case, there has to be some provision for liquidity as well, and for these kind of opportunities when they hit. When they come your way, you should be able to able to deploy that money.
Where would you put it? You would put it in debt mutual funds. You would put it in arbitrage. Is there a preferred way that you would suggest?
I would prefer to invest in arbitrage or a liquid fund, for that matter. Instead of investing into debt fund, because debt also comes with some bit of volatility.
I meant that only. So the broad category of debt funds, you're choosing the lower end or the shorter end of the spectrum. You're saying liquid funds or short-term debt funds or something like that.
And again, I have a reason for that.
Which is?
So I say that when you are investing for a short period in a fixed income product, you should have one term in mind, and in that particular order is safety, liquidity and return.
Okay.
So if the shorter end of the curve you have when you are investing, your safety is taken care of, and it also provides liquidity, and then followed by the return. Because there will be a difference of return by 50-60 basis point, but that doesn't make too much of difference.
Speaking of returns, there are a few couplets that relate to enjoying the moment or enjoying the process that you told me about, and they're really beautiful. Can you tell me about that?
Yes. So people keep chasing the return, probably because of sheer excitement, or rather at times to flaunt that, say, hey, I have made this much of money. And the fact is, if you are not able to enjoy that money, then there is no reason to invest, right? And that's when Kabir says that कौड़ी कौड़ी माया जोड़ी जोड़ भरेला थैला कहत कबीर सुनो भाई साधो संग चले ना ढेला. It means you are penny wise pound foolish, or say penny you are adding to your portfolio, your corpus. कौड़ी कौड़ी माया जोड़ी जोड़ भरेला थैला. So you are now back full of gold, say, okay. कहत कबीर सुनो भाई साधो. So he's saying कि gentlemen, I'm telling you that whilst leaving this world, you'll go empty-handed. So why not to enjoy that money, right? Rather than chasing the
golden
returns.
words. And ultimately, I'm stunned by the fact that this wisdom holds through the ages, right? It's so true, and it is said in different languages. It must be said, right?
Yes.
Because you come to this world with nothing and you leave with nothing. It's what you do during that time frame that is the most important. So this is one thing, and then beyond that as well, to more or less just draw all of this to a close. Having a goal obviously is important, and saving towards a goal. Saving, you pointed it out, the fact that you should enjoy the journey and you're not saving just for wealth creation. This is an outcome. You are saving so that you can utilize that wealth for something, which is why one of the first questions I think advisors like yourself ask people when they say, I need help with my money, you ask them, what do you need it for?
Yes.
So what are the learnings that you can take from the saints that relate to this?
So important thing is your why needs to be clear on the day one. And if you are not clear, you sit with your advisor and get it clarified that why you are investing in first place. Secondly, whilst investing, it's a journey. So it will go through a lot of ups and downs. You need to have patience, you need to have discipline whilst investing, and follow that. Whilst following that path, you need to follow the discipline as well. It is very, very important. So any investment which you are doing, eventually you are going to enjoy that money, right? And for that, whilst setting the goal, sit with your advisor. And at times people have this habit of investing or asking that what is the minimum investment I have to make, right? And that's where you end up missing the goalpost. So Rahim says that Rahiman chhot naran so hot bado nahi kaam. So if you're looking at a larger picture, larger goal, then you'll have to invest larger amount also. For that, when you sit with your advisor, you can differentiate between need and want. So when you decide that, okay, this is my need, it means I'll have to spend this much of money, and if this is a want, I can,
do away with
this, and I can invest that money in the funds or in the asset class which have been suggested. So Rahiman chhot naran so hot bado nahi kaam. Madho damamo na bane 100 chuho ke cham. So rather than asking that question is, okay, what is the minimum investment required? You should focus on the goal, and if the goal suggests, it's like when you are chasing a 300 score in a one-day match, you'll have to take some bit of risk. You'll have to make one boundary at least in an over. So you'll have to take that kind of risk also. So the Doha suggests that Rahiman chhot naran so hot bado nahi kaam. It means the people who think small, they won't be able to do big in life.
Important message there. And there's also another teaching and several teachings related to action and related to moving away from procrastination and not waiting till. And look, this is true for good advice, for health, for wealth, for everything else, right? The better thing is to start work, and in the context of your physical health, the advice is to at least show up.
True.
So is there a teaching on procrastination?
Yes, and a very important one, because whilst on the journey of creating wealth, the most important thing which gets ignored is the power of compounding. So Kabir says, "Kal kare so aaj kare so ab."
The most famous one.
The most famous, and in the school, probably we have made a lot of fun of this doha. But "Kal kare so aaj kare so ab." पल में परलय होएगी बहुरी करेगा कब. That you need to start today, or rather right now, this is the time when people ask, many times people ask, what is the best time to invest?
Yes.
The best time to invest is now.
On that note, thank you so much for joining me today and for sharing those words of wisdom. And
Thanks for having me.
My pleasure. And you heard that. If you aren't investing and you're listening to this, start now. Let us know what you think and do stay tuned. This is NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone will say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
Big fund infusion in Samman Capital. Abu Dhabi based IHC will infuse close to 8,850 crore rupees in the company. How does that help and what changes going forward? To understand more on that, we are today joined by Gagan Banga, the MD and CEO of Samman Capital. Firstly, sir, thank you for joining us and congratulations on the fundraise.
Thank you for having me.
It's quite a significant fund amount that you're raising from IHC. But why this fund infusion? Did the company need funds at this point of time? And does Samman Capital actually need a strategic investor at this point of time?
So if you trace back our journey, especially over the last 7 years, we did hit a reset button about 7 years ago in the aftermath of the IL&FS crisis followed by COVID. And our understanding is that when a large balance sheet in the financial services sector hits a reset, it takes about 6 to 8 years for it to normalize and start growing again. And there are several examples of this between banks and non-banks. So we were at that stage where 21 to 23 were years where we were trying to stabilize the operations. 24, 25 were years where shareholders gave us a significant amount of money. We were able to make provisions and move on and try and start moving in the direction of business as usual. As we progress on that, we are clearly mindful of the fact that in an NBFC business, the foundation is provided by the equity capital. We already have sufficient equity capital. What we did need was a high quality partner or a promoter to solidify that base. And on that base gets built the building of the balance sheet, which is largely financed by debt. So for every rupee of equity, we raise 4 to 5 rupees of debt. Right? The ability of being able to borrow that 4 to 5 rupees efficiently at the lowest possible cost with the longest tenor across maximum number of lenders is clearly an outcome not just of the absolute amount of equity, but also by the quality of the people standing behind that equity. IHC, given its size, its governance framework, is that organization which brings in the solidity. More so, their decision to come in as a promoter even increases the strength further. So from a stability as well as from a growth perspective, not only do we have the requisite growth capital now, we have the right kind of a promoter. The other big thing is that what one is very mindful of is that will people need loans 5 to 10 years from now? Most certainly. Would loans be getting appraised and lent out in the manner that they are today? Most certainly not. Right? There is a very rapid tech evolution happening. And in order to stay ahead of the curve, there couldn't be no partner better than IHC, which has a massive ecosystem of tech-enabled organizations, AI-focused organizations. That ecosystem is second to none. We do a plug and play into that ecosystem and get several years ahead of whatever else is happening in our peer set. So it's a great combo of capital and tech combined with the management expertise and experience, right? I think now sky is not the limit.
Right, sir. But when you look at your book value, in the first quarter and it was at around 250 rupees, then why have you done this fund infusion at a much lower rate? Because your book value goes down significantly from 250 to 200 rupees. So why this fund infusion at lower rate?
See, book value is a balance sheet item. It is reflected in the net worth of the company, in its tier 1 ratios and all of that. Where such transactions will get priced is more an outcome of the valuation of the company basis net asset value or discounted cash flow, or as per this SEBI prescribed 10-day, 90-day VWAP formula. Right? The board took on the valuation advice provided by the valuers to see that the offer coming in at 139 rupees per share was a offer at a fair value, and therefore decided to give its consent to the issue. Book value and fair value for a stock capital infusion are two different things, right? Secondly, what is perhaps not appreciated enough is that unlike a manufacturing business where a promoter is manufacturing A and nothing stops them from using whatever profits are there in that business to start manufacturing B, C, D, E. In a regulated business, that is not possible. Right? In a regulated business, it's actually the other way, that the promoter is taking ownership of a very high amount of debt. Right? In this case, if business projections are to work out fine, we will go back to a borrowing program of 1.5 lakh crore. The incoming investor has confidence that the management team has the ability to manage such a borrowing program. But at the end of the day, it is their name, it is their reputation, it is their equity which is also at stake, right? So I don't want to get into, what's a good price, what's a bad price. There is a process. That process needs to be followed in letter and spirit, and the interests of the minority shareholders have to be protected. That has been done to the T.
Right. Okay. Now, given that an FI is investing, also becoming a promoter, how does the business perception of Sammaan Capital change, and does the business strategy also change going forward?
Yeah, so the strategy is to, over the next 12 to 18 months, get the company into a format where the lowest hanging fruit for us is to stop breaking the asset up into legacy and growth, right? Whatever assets have to be unbound will get unbound. What we are left with as of end of fiscal 27 is all the right kind of asset which we want to grow. That's point number one. Point number two is that over the next 12 to 18 months, I would imagine within about 6 months of the approval coming, we should be operating at a interest cost which is at least 150 basis points on our debt lower than where it is today. These are two significant milestones to achieve. As an outcome of these two, we will get to the third big picture goal, which is to get to a AUM of 1 lakh crore by end of fiscal 27. Now, what is life after fiscal 27? While we are doing all of this apparently visible stuff, what we will be doing also at the back end is in the segments which we've identified as our target segments, which is the low to mid income group. Currently, we are focused on the mortgage business, giving out whatever loaning products are available to us, provided a property is being mortgaged to us. That will expand to the segment stays the same, low to mid income, but whatever are their general loaning requirements, we need to critically examine each of them to see which one makes commercial sense for us. Whichever is a commercially viable loaning product to offer, we will expand ourselves to that. Second, if we have such a large customer base running into several lakh borrowers, right, and each of them being a fairly robust income profile borrower, there are a whole lot of other financial services which are required by them, which are beyond loans, which we don't want to do, but we can certainly leverage on our client base to partner with other service providers to see how we can do it in a more focused, in a more profitable manner for Sammaan Capital. So that's broadly the lay of the land. Focus remains low to mid income. All loaning options are with us. All financial services options are with us, but those are in partnership mode.
Right. So anything that you have outlined that you will look to enter, any new segments that you plan to enter, anything that has been outlined?
It's too early right now because we are in a land where the regulator is being extremely proactive and is therefore evolving regulations very rapidly. So we don't know which product will have what kind of regulations behind it in, let's say, calendar 27, right? It's still 2 years away, so to say. Without regulations to be able to go on the drawing board for any product is being foolish, right? So we will wait for regulations to evolve. We know these are the type 4, 5, 6 products that are there. How do regulations evolve? For example, there was a news article that I was reading that the RBI is considering that if a mobile phone is bought on borrowed funds, if you default, it can get locked, right? That's a game changer. Right? Suddenly a product which is running at X% delinquency will run at delinquencies which will probably, in my estimate, will be not significantly different to a home loan delinquency. Right? Today, without your phone, you will feel as helpless as practically you will feel without a roof on your head, right? So why should the behavior be any different? Is that going to play out in the market? I don't know today. Will that regulation ever come? I don't know today.
So you were talking about that legacy book. I believe it's around 20 to 23,000 crore at this moment. So will some of these funds be used to write off the legacy book? To what extent can we expect writing off of legacy book to come in going forward?
So let's not go to whether we need to write off the legacy book or anything of this sort. There is a action into which we are firmly on the driver's seat, which is to recover, cash collect 10,000 crores in this financial year. We are firmly in sight of that number. We will do that number. As a result of that, the legacy book will shrink further. Right? The second objective very clearly is by end of fiscal 27, I don't want any part of my balance sheet to be legacy or growth. Right? It is all growth.
Right.
So let's take each step of the journey and not try and run ahead of ourselves. The other clear message that I want to give via you is I'm fairly confident that for the new loans that we are underwriting, right, our annualized credit costs would be steady at about 100 basis points. Right? We will, from the loans that we have technically written off, recover 5,000 crores. Okay. So between 10,000 crores of cash collections, incremental credit costs of 100 basis points, 5,000 crores of recoveries, equity capital, the right partner, I think we have all what we need to do a very good growth from here, right? Everything else will keep doing, that's technical stuff for which management is paid.
So this 10,000 crore of recovery you are expecting?
Cash collections.
Cash collections. 5,000 of recovery and this 8,850 crore. For how many years this entire amount can be sufficient for the growth plans of Sammaan Capital, given that you have a target to reach an asset under management of 1 lakh crore by FY27? Will the company
So the
need
two
further
goals,
infusion?
one sort of medium term, the other sort of long term that we are working towards as a team is fiscal 27, we want to get to an AUM of 1 lakh crore. Fiscal 30, we want to get to a profit of $1 billion. Okay. Right? So these are two goals. We know what we have to do. We know when we have to do it. We have to look at regulations. We have to look at macro and keep on working out the fine details of whether our decision is right or it needs to evolve. But the picture is pretty clear in front of us now.
Right. Now, if you look at the first quarter, your asset quality did improve. But is there any pain point that you're seeing that could worsen this going forward?
Again, asset quality will play out in a range. So from wherever gross and net NPAs are, a range of 50 basis points can never be out of question, right? It can't be out of question for any lender, not for us.
Well, thank you, sir. Thank you for joining us and giving us the growth forward for Sammaan Capital. Well, that was the management, Gagan Banga, MD and CEO of Sammaan Capital.
Viewers, we have a very interesting conversation that we also teased during the break as well with WeWork India's management. Mr. Karan Virwani, the Managing Director and CEO, is joining us right here in the studio as well. Mr. Virwani, thanks so much for joining in today, and many congratulations firstly on the IPO. Let me first start off with why the particular IPO at this particular point of time, because you all have been doing a lot of desk additions over the last few years that has been doing very well. You're very close to being profitable as well. You were in FY25.
Yeah.
Any rationale of choosing the IPO at this particular point of time?
Firstly, thank you so much for having me. I think over the last 8 years, if you see our entire segment, not just WeWork, we've grown what is now known as the flexible workspace segment. It's becoming a larger part of commercial real estate, but still at the very early stages of its entire growth trajectory. It's a sunrise sector, within the real estate space, and in the last 5 years, especially post-COVID, we've seen a lot of adoption from some of the largest companies in the world to some of the best startups, mid-sized companies. And as WeWork India, in that time, we've really grown the business to become now profitable. We're generating, we've grown revenues at a CAGR of 20-25% year over year. And we've reduced debt also. As of January, we did a rights issue into the company, which was actually at a higher value than even the IPO that we're doing right now. that has made the business extremely stable, self-sufficient, in an industry and leadership position in an industry that's growing drastically, and so the IPO seemed like the best thing to do right now from a perspective of being able to create value for investors once they come on board, the ability for us to continuously go on this growth plan and continue to keep our leadership position, and then finally, I think that our business will always require capital because we invest in capex, and this gives us the ability to access the cheapest form of capital, which will come and show itself in your return on equity and finally return on capital itself. So for those reasons, this is why we had decided to do it. I think also as Embassy, which is the promoter and the parent business, has invested almost 1,500 crores in this company. WeWork Global has invested close to 700 crores into the company. And this was all at a time where the business was extremely risky. Everyone thought the business model and the business was dead. So now, by being able to do this, as Embassy at least, we can take some of that capital back, strengthen the rest of the group, strengthen the other platforms that we have, and just focus on growing a good business.
That's interesting over here. A quick follow-up, Puneet, I want to take over here is we spoke about the profitability in FY25. First quarter of FY26, the company has incurred a loss to an extent. Want to understand your overall outlook. Will you continue the profitable trajectory, number one? And two, a revenue growth of 17 to 20% is what we've seen in the first quarter. A sustenance of 60% margin profile. Is this combination a possibility?
Yeah. So there's an accounting standard, the India's accounting standard, that impacts our business, in a heavier way because of the way leases are accounted for within India. So you will see that in the EBITDA, which is 63%, like you said, the reported EBITDA, it doesn't take into account the lease costs, right? So the way that we view the business is really, obviously, after all of those expenses, it's a major part of our expenses. So the adjusted EBITDA number is what you really need to look at, which is roughly about 22% or as of last year, 420 crores. Now, in the same light, because of the adjustment of the leases, in the reported numbers, you will see this loss, that the business has. It's not actually a cash loss, but it's the reason is because the leases get treated almost like a liability, and upfront there's a lot of depreciation and interest cost that gets hit on the book. So every time we're expanding and bringing on new centers, the first few years you'll see a heavier hit on the books, which will show this sort of loss. But from a IGAP or even from a cash perspective, that's not the outflow that the business sees or the profit that the business sees. The business actually has been profitable for the last 3 years on an IGAP basis, or really how we look at operating the business, cash in, cash out. That's kind of pretty much what we are looking at. While Q1 has shown you small losses, if you see from the previous quarter, it's down almost 60%, quarter from year over year. And we believe that even through the accounting hit, with the way that the business is growing, the cash flows and the profit margins, we will show profit in the coming quarters continuously, and sustain the revenue growth rate that you're seeing.
To add to that, let's add the occupancy bit as well, because when you talk about the June 2025 number, your occupancy rates have fallen if I have to compare it to FY23. I think from 83-84%, it's come down to around 76%. Now, this is somewhere telling you that the desks are vacant somewhere, right? Will this directly then impact your profit margins, or won't it?
Yeah. So FY23, if you see, we had roughly about 60,000 odd seats. Today we're sitting at close to about 114,000. Last year itself, we added about 27,000. Predominant 16,000 of that happened within Q3 and Q4. So the way that our business model works, there's a ramp-up period. It typically takes us 4, 6, 8 months to fill up centers. So what you're seeing in Q1 is just a moment in time occupancy because of the expansion that we saw last year. You'll see across most of our portfolio that within 12 months we take the centers up to about 80-85%. We've done that over the last 7 million square foot, and this expansion is of 1 million odd square foot that came in the last, 2 quarters. In the next quarter, we're already seeing that, occupancies have now come back up. And this will continuously actually keep happening depending on center addition, and new inventory expansion as we keep growing. Just sorry, a pointer note on this is that FY24, we had an average occupancy of about 80%. We delivered 20.4% EBITDA margins. Last year, we had a slightly lower occupancy, 76% on average, but delivered a 22% EBITDA margin. So there's clear margin expansion in the business, even as we're bringing on all of this excess capacity or bringing on fresh capacity today.
You mentioned that at the start of this year you had a rights issue as well to the fund, and while there was a higher valuation compared to the IPO, were the investors okay with this particular valuation that you're going with at this particular point of time? Because we've seen a flurry of IPOs as well, and some in your space as well. So what has been the conversation regarding the valuation at this point of time?
Yeah, look, we went through an extensive book building process, and actually if you see the anchor book itself, today we have some of the top, domestic, so iPru to HDFC MF to Moti to, Access, all 360, all of these are really large names and a very high quality book. And also foreigns like Goldman, Amundi and ADIC also, who have now joined the cap table. So that is what we wanted, a very high quality book, and if that meant doing it at a slightly lower price than what we did recently, we're completely okay with it, because to us there's firstly already a lot left on the table, and we think that in the next few months or the next few quarters this won't matter. For everyone will get to make money, and everyone will see some upside for sure.
Okay. No, go ahead.
Okay. So with the upside that investors are watching out for, I mean, that's why it's an OFS for 3,000 crores already. You've not considered a fresh issue at all.
Yeah.
So is it that the company has sufficient funds to meet the further capex demand that could be coming in and cater to the debt, or what is the plan on that aspect?
Yeah. It's exactly that. So after the rights issue, which we did in January, we used all of that capital to pay off a huge chunk of debt, which has freed up cash flows. And as you know, as of last year, we're delivering EBITDAs of 420 crores post all expenses. So with the reduced debt, and now the cash flows that the business is generating, we actually have more than sufficient capital to keep growing on this 25,000 desk addition that we have in mind, and service the debt that we have also. We also are able to really access quite cheap capital, cheap debt, moving forward as well. Today our cost of capital will be, in the 10% range. Hopefully after the IPO that comes down, even further. And so we will balance internal accruals with some, small amount of debt, and just keep managing that as we continue to grow.
With everything said and done, I think we've just gotten a story wherein an investor has flagged disclosure lapses, and there is SEBI inaction is what they've indicated. The hearing continues in the Bombay High Court as we speak right now.
Yeah.
What is it that you would have to say? Because the allegation is on material non-disclosures and regulatory inaction, misleading statements and significant omissions, and it says concealment of a criminal charge sheet against promoters. What would you want to tell investors?
I mean, all I would say is that we've been through the most extensive approval process when it comes to SEBI. We have disclosed not just what we needed to from a regulatory or law perspective, but we've actually gone over and above that to disclose. And this is really like some pressure tactics that we have from, certain business that has an issue, not just actually not with WeWork, with the Embassy REIT, which is where, this issue has come up, and just because we're going IPO, they think that, you know, by doing this at a vulnerable position is going to have some impact on us. It's not. As a company and as we work, we are the squeakiest clean type of organization.
So what's your argument to it in the court right now? Because I know, I mean, there is an advocate who is representing WeWorks as well. So what is the argument that you have, number one?
There's no argument. We've made all the disclosures that we need to, and you know, SEBI has gone through its process and given us the approval. And
so if anything negative comes out of this in terms of the hearing, is there a possibility that they could stall the IPO?
No, we don't see anything negative coming out of this. This is just a way to have some bad publicity or like pressurize us, which is not going to happen. And we are in a great place. We're very confident about the business, the growth, and we've done everything that we needed to do.
Absolutely. And you know, this really helps an investor or a viewer when that clarification comes in from the promoter, you know, when stories like this do come up. But thank you, Karan, so much for joining us on the show.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
the gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you. The idea of MyGate has come from your co-founder, and then you joined in. You are now CEO of the company. It's growing at a great scale. I think 25,000 housing societies is what you cater to. Your market cap is close to about 2,000 crore rupees. But did you think it would get this big when you started out?
Well, I think every entrepreneur would dream to build a large, successful, sustaining company. But when you start, I don't think, at least us, we didn't think that it will become so big, right? What got us excited when we started living our, I guess, the comfort of the jobs after 15 years or so, was the fact that we saw some trends that got us excited. The trend that you spoke a little bit about is gated community, which is becoming a preferred place of living. Safety and security is one of the key reasons people prefer to stay. An interesting aspect that we observed around us was how the gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside. I think that was a unique insight that we thought that got us excited and led us to start MyGate.
Your own journey has also been very, I think thoda hatke, I would say, for lack of a better word. You've done the IIT, IIM drill. And a lot of founders that I speak to have had that experience. They then go on to great jobs, and you've had, 16 years of professional experience before you became an entrepreneur, worked in the United States. Right now, the first thing I want to ask you is, did you go on an H-1B visa?
Yeah, pertinent question. Yes, I did go on H-1B H-1B visa. And I do want to make a comment since you asked that. Probably it's a great trigger for people to move back to India and start something here.
Okay, you're talking about the Trump administration's clampdown on H-1B.
Yes.
Yeah. So it might be a great trigger, but what was the trigger for you? Because you were about to get a green card. I mean, at one point that was the Indian dream, and maybe it still is for a lot of people.
Yeah, I think for one, in my mind, I never decided that I'll settle in US, right? So going into the US was a master's program. So I went for that. And the next logical thing was to take a job start kar lete hain, so that I did that. But I thought that I'll do the job for a couple of years and then move back. So in my mind, I was very clear that mujhe India mein hi settle hona hai. But along the way, because the job provided different opportunities for me, both in US and in other areas of the world as well. So I kept going at it until in 2009, I said, ab bahut late ho gaya hai. If I don't decide to make that switch or go back to India now, it will be very late.
Let me pick up from that point. आप कह रहे हो कि one fine day you said कि बहुत हो गया. इसके बारे में थोड़ा बताइए, because that is unusual. People don't want to come back once they taste that kind of a life, a different kind of a life. Is that something you didn't like over there? You didn't feel at home, or you had this, Swadesh kind of moment कि मैं इंडिया आके कुछ करूँगा?
नहीं ऐसा, I don't want to get cliche, ऐसा बिल्कुल नहीं था, right? ऐसा बिल्कुल नहीं था कि मुझे इंडिया के लिए कुछ करना है. I just felt कि eventually मुझे इंडिया में settle होना है. I didn't want to sit and find a job opportunity sitting in US. तो एक soft landing किया through IIM Ahmedabad का 1 year program that allowed me that 1 year period to figure out what to do next, and then started with the next sort of phase of my career, which is Goldman. And from there, I guess the seed of MyGate started, because Vijay Arisetti, who joined Goldman right after me, we became good friends, and then we'll speak about how the idea came.
Yeah. So let's talk about the idea of MyGate. And with a lot of companies that started at the same time as MyGate, 2016, 2017, 2018, I think you can say that's the golden period of startups in India. When you look back, some of those ideas now seem like no-brainers. Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
It was not the case then. The original idea was a trigger of our own experiences. So Vijay is an ex-army guy. He had lived life in secured cant areas. So when he retired and came to civil life, his first preference was to stay in a gated community, and his gated community balcony was facing the gate of his society. Oh, वहाँ पर I think he observed things कि I'm suddenly seeing the external footfall बढ़ रहा है, Amazon and e-commerce का just start हो रहा था. Intercom was being used, intercom is not working. Then he went to see the guard, and वहाँ register में कुछ लिखा हुआ है, nobody can read what's being written. So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है. And that's when the original idea came, and hence the name MyGate, which is solving for the friction at the gate. And that idea he explained to me, and then we said, yeah, this looks very relatable. This is something that has macro trends. Gated community बढ़ रही है, gated community बड़ी हो रही है. And interestingly, gated community is also now what we thought earlier is the theater of commerce. If you see all the boom of quick commerce and every dark store being built around gated community concentration, क्योंकि in that 1 acre, 2 acre area in a high rise, you get probably 10 times of the households that you will get if you spread that across in a normal, individual houses. So those are the trends that really got us excited and quit our job and take this plunge. So,
okay. So what I'm understanding right now about you, Abhishek Kumar, is that you have no fear of quitting something which is safe and jumping into the unknown.
Yeah, I think that's probably a good conclusion. And if you don't do that, if you don't leave your comfort zone, if you don't leave something that you are settled in, I think, you don't get a chance to do something and really discover yourself as well.
It helps if you have a very strong financial backing, or you don't have to worry about bills month to month.
Absolutely. And good point.
Was that the case?
Yeah, absolutely. So the trigger ki kuch apna karna hai for me was in that 2013-14 time period. So I did start saving for at least 3 years before the MyGate journey happened. So saving, ensuring that if MyGate doesn't work in case, right? Obviously, within MyGate, we may not draw the salary at all for several years, or just quite a fraction of what your normal salary is. So I was prepared for that aspects as well.
So there was some planning that went into
Absolutely.
Okay, so the three of you get together. MyGate as a concept is born. And that's really when the struggle starts, isn't it? First to get funding and then to scale up.
Yes. So first, before you can get external funding, you can have a great idea. But I think you as founders, you have to also show that you believe it. And one way of showing it is put your own capital if you have whatever capital. So all three of us, Shreyans, Vijay and me, committed our own capital. Then once we did that, our friends and family members committed capital. And it was only that allowed us to have some product and proof of concept is when institutional funding came. So I guess one key takeaway is it's just not about idea. You do have to put some capital behind it.
What was the initial capital amount for MyGate?
The initial capital amount before institutional funding came was about 2 CR.
Okay.
That was personal and friends and family.
Okay. So, in today's context, I think 2 CR doesn't seem that much to start a company.
Yes.
But at that time, you started with that faith. Was it a difficult idea or a proposition to sell to investors?
Once you actually not, because in our case what happened was the first institutional investors found us, we didn't find them. And there's an interesting story because they found us because the 3 partners were staying in gated communities. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke कि यार मेरे सोसाइटी में MyGate लगा है, what is this interesting concept. 2 months later another partner के सोसाइटी में लग गया, another month later उस partner के sister के यहाँ लग गया. And then they said, look, we need to call these guys because looks like something interesting happening in this gated community space.
That's a very lucky space to be in where founders are looking for you. Your investors are looking for you. Saying ki
yeah, we were lucky. We were lucky. Huh?
Okay. The scale up from one society to the other, because it depends on the product. Either you pitch to the investor or you pitch to the end user.
Yes.
In your case, you've started with the end user.
Yes, yes.
What was that like to get people on board, whoever is the society secretary or whoever, takes that call, and then ensure that the security guards actually know how to use it?
You were building a product that was going to be used by a security guard at the gate. It was important for us to understand what is the persona of a security guard is, right? We hardly spend time knowing our own security guard in the society. So what Vijay and I did was we shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate, and that also led to very interesting insights. Right? First we realized that वो intercom बहुत use करते हैं. So
एक मिनट, shadowed मतलब क्या? आप खुद बैठ गए 14 घंटे 12 घंटे?
हम खुद बैठ गए for several weeks with the guards from morning 5 AM till 10 PM in the evening.
Did you pretend to be a security guard, or you explain that this is what I'm doing and I just want to observe you? How did you work that out?
उनके security cabin में gate पे जाके we spent time, we observed behind their shoulders क्या कर रहे हैं, then some of the actions we did ourselves, and that was very insightful. It told us कि smartphone penetration उतना नहीं है, if we make a complicated UI UX for them to operate in वो नहीं कर पाएंगे, तो वो सब designing of the interface of the product that eventually security guards would have to use, this exercise was extremely useful. एक और insight आया, we actually realized that the problem statement is much bigger. We realized that morning में just knowing as simple thing as मेरे house help में maid, cook or driver, what time they came, this alone was a big problem statement among residents. And when we solved for that, and you asked about how did you get your first clients or first societies, when we solved for some of these small things and showed to the secretary and treasurer, they really liked it. The fact that you could be in the gym or park or in Delhi or in US or any part of the world, knowing when your house help has come, knowing when your deliveries have come on your mobile and not have to worry about anything else was an aha moment. So that was that aha moment that really sort of encouraged us to keep going.
No questions at that point about surveillance, privacy, because on the app you can actually see if there's a certain person that is being tracked, anyone coming in and they're not a resident, then where are they going, which homes they're going to. There's a lot of information out there.
It's a question that we are very aware, very cognizant and very paranoid about as well, in the right way. With my and Vijay's background in investment banking firm, it's financial institution, which is Goldman, and Vijay's prior experience in defense, one key thing was that the word client confidentiality, the word data privacy was ingrained in us as part of our previous trainings and job experiences, which actually many people don't realize how important this is. So even the first communities that we sold MyGate to, we ensured that our systems, processes, contract, the security testings that we do, those are foolproof to the extent that we can confidently say that you can trust with your data, you can trust us. And that so far we have maintained. Obviously, it's a key aspect of MyGate that people trust.
You've also expanded beyond just security. And,
Yes.
with the volume of parcels that have started coming, e-commerce, etc., it also can get a little tedious for the users because you have to keep approving, etc., you have to be near your phone. But you've expanded to make it an ecosystem for a lot more, isn't it?
Yeah, absolutely. As you dig deeper and you understand the problem statements of gated communities along the way, you realize that there are several problems to solve for. One, the communities and gated societies are becoming bigger and bigger. So in Bangalore, what we used to call one of the largest gated community was about 2,300 homes. Is a common place there now, right? There are now communities being built with 5,000, 6,000 homes in large 50 acre, 200 acres campuses. Which means that you need truly an enterprise grade solution to not just manage gate and security. You need finance and accounting to make sure the invoices are being raised. You need a clubhouse management solution for badminton code booking, this, that. You need a complete sort of help desk and ticketing system so that somebody can raise a ticket for leaking faucet. You need a communication module for election, for notices, for polls, for elections, for event management.
The question that comes to mind is gated communities are growing, yes, but there is a limitation to how much this will grow in a country like India. Even now, urbanization, yes, is growing, but do you think that there is enough scope for continued growth?
Absolutely. I don't think we are anywhere close to seeing any stagnation first. If you see, in our estimate, there are about 180,000 to 200,000 gated communities across the country. We are just in 25,000 today. So there is enough sort of room to grow there itself. If you see urbanization leading to city being expansion of the city, that is being led by real estate developers launching more and more gated communities. So as city is growing vertically and horizontally because of residential communities. And that is growing at a 12 to 13% CAGR. So I don't think, we call it the Great Indian Gated Community. That's our phrase internally. I don't think it's going to stop anytime soon.
Yeah. What are the other areas where you can expand? I know you had funding from Urban Company and there's a tie-up with the Urban Company also. So for all of the home services, etc. Yeah. Where else can you go ahead and expand now? Because I'm just wondering how much can you cater to that one community? And how much can you grow on top of this?
Yeah. So like I said, today we are about 25,000 gated communities with 5 million homes. We absolutely see ourselves in 20 million homes, and that's limitation is us, not the market. So just staying true to the core and growing your core base. Second, the product portfolio. We have built a comprehensive solution, ensuring that all communities are using a full suite of products. That itself is a big problem statement. Third, we have ventured into advertising as a way of revenue generation. Fourth, we have also launched the same way we started with the gate of the community to all things community. We are now knocking at the door of the home. We have launched MyGate Locks, which is our first product, physical product that we have launched. So in a sense, these three opportunities today itself are something that will keep growing us at a 35 to 40% year-on-year growth in a sustainable way in the next at least 4 to 5 years.
And what about profitability? I know break-even has been achieved, but is there a clear path to profitability here?
Last year, FY25, we were break-even. It was positive 0.2%, so barely break-even. That was EBITDA number. This year, we are already EBITDA positive, and full year I'm targeting at least 8 to 9% EBITDA positive.
So Abhishek, you are now perfectly set for the next phase that every startup goes through. The profits come and then you hit the capital markets, isn't it?
We hope so too. We hope so too.
So IPO is in the plan.
Yeah, we have started the discussion, and probably in about 15 to 18 months is how we are thinking about it. It's too early to comment on that, at this stage, but definitely on the radar.
I wonder, as part of this ecosystem and very vibrant ecosystem in Bengaluru and many parts of the country now, as startups are coming, do you think that appetite and space for newer ideas is very much there when you sit outside as a successful founder and look at the ecosystem? Or is that golden period between 2016 and 2018 now tapped its potential?
I would say hardly so. I think we are a state of evolution always, which means new ideas and new opportunities will always be there. I don't think there will be ever a time when we say that all opportunities, all problem statements have been solved in the country like ours, such a diverse country with diverse population, right? So the short answer is no. I don't think that will ever be the case, at least in my lifetime.
Yeah, no, but has it become tougher? Has it become tougher to raise funding? Has it become tougher to find the newer ideas of problems that have not yet been solved?
Look, what we had solved 10 years back and all the companies that are successful today are what I would call problems that seemed like immediate, right? Like the e-commerce and the, or medical in transportation or commerce or healthcare. So relatively it may seem difficult, but I don't think if you dig deeper and if you're passionate about a problem statement, there's any dearth of that.
What do you think is the biggest mistake startup founders make?
One is when you're looking to work with your first is who are you working with, right? And I'll relate to the MyGate team, right? So when we decided that three of us, a co-founder, will come together, we realized that we all three have complementary skills. So the first mistake that founders can make is that bringing together a set of people with same skills, and that leads to conflict. Second is the mistake I would say is that if you put your personal dreams and objectives ahead of the company's objectives, that will cause things to break. In our case, we are fundamentally, obviously we argue on several aspects, but company well-being and the company growth is everything. It's about MyGate first, and our desires and our intent and objectives follows second.
इसमें से कितने मिस्टेक आपने किए हैं?
इसमें mistakes हमने जो I would call mistake is we had an opportunity to acquire a company couple of years back, which we I guess we did not do, and that was probably a mistake.
You have to tell me which company.
I cannot tell you that.
Hint to दीजिए.
No, I cannot do it. So I can't do that.
Did someone else acquire it?
Yes, somebody else acquired it. Second, I would say कि जो mistakes किए नहीं, but we were very close to making that mistake, is कि we thought कि there was an attractive offer to make MyGate part of a larger enterprise. We started to delve into that for several weeks and realized that if we do that, if we had gone down that path, it would be a big mistake. So if you're very sure of the idea, don't get lured by these kind of offers and all of that, then stick to your guns, which we did. So we avoided that mistake, but we were very close to making that.
Okay, so one acquisition missed is a mistake, and being acquired missed is something which is not a mistake.
Not a mistake.
To put simply. I want to come back to the H1B question, Abhishek, because that's an experience that you've had. And there's no dearth of aspirants even now, maybe many who are in the process of aspiring for an H1B visa, and maybe this issue will be solved, whatever it is. Having lived part of the American dream, do you think it makes sense to tell young Indians today not to go out and experience it? Because, you've experienced it.
Yeah. It would be wrong on my part to say, if you have an opportunity, if you're getting the exposure, don't get that, right? That will be wrong of me to say that. I would say that the first 10 years of your career, get all the different kinds of exposure opportunities, maybe it's US or different country, but I think that really opens your mind to a lot of things. But then it's your call after 10 years.
What is your advice to your younger self in 2016 at the start of the journey, knowing now what you do? Or even let me take it back further. If you could talk to your younger self, would you have said, start your entrepreneurial journey earlier? Take the plunge earlier? What would you have done differently?
Look, I feel this 9 years of entrepreneurial journey has been quite rewarding for me. And if there was one advice or one thing I would have done differently is start this journey much earlier. I feel that my 16 years of work experience and the learning that I had in those 16 years was extremely comfortable, but the learning quotient was probably not as high as what it has been in the last 9 years.
Okay, it's been an absolute pleasure, Abhishek. Thank you so much for speaking with us and opening up on your fascinating journey.
Thank you so much for having me here.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Right, hello and welcome to NDTV Profit. Today I'm joined by S. Krishnan, Secretary of the Ministry of Electronics and IT. Sir, your ministry has been at the center of several sweeping reforms over the past year or so, right from online gaming to data protection, from AI to semiconductors. There's been a multitude of reforms that have come in that have shaped India's digital economy. So it's a fantastic time to be talking to you, sir. We caught up around the same time last year, and MeitY was buzzing then, and MeitY is buzzing now. So congratulations on a fabulous year. First things first, sir. The buzzword from MeitY that is coming out is the DPDP. When can we expect, sir, the final rules to come out? And what is the sort of all right, sir. Yeah.
No, on the DPDP rules, I think all the work that has to be done in MeitY has been done. We've taken on board. There were more than 7,000 independent inputs on the draft rules. So we took note of all of those, figured out what needed to be sort of cleaned up in the rules or what changes were needed. We've taken care of all of that. The changes are not very extensive over the draft, but it had to be carefully considered, which is why it took a little while. Now we've finished our part of the work. There is a process within government of a legal vetting which has to be done before it is finally issued. We are going through that process. So it's a matter of now fewer than days. I mean, it can be any time that it comes back to us for issue.
So, with respect to the DPDP, will there be a transition period that companies can expect?
I should say that the minister had set us a goal, saying by 28th of September the work should be done in MeitY. We beat that deadline, but we'll have to sort of.
So, with respect to DPDP itself, there were concerns coming in from the press itself. There were concerns from smaller players in terms of how they would be able to comply. Have those been put to rest very sufficiently?
They've more or less been put to rest. I think through the process of the consultations, we also had considerable awareness building about the rules. And I think most of the misgivings and misapprehensions have been addressed. So all of that has been taken care of. And I think as far as the media is concerned, they had also delegations from the media had also met us. And I think it was made adequately clear to them that the media is not seen as a data fiduciary. And also that most people who share data with the media do it on a voluntary basis, and that is with consent. So.
Fair enough, sir. So another very important piece of legislation that has come out of MeitY is, of course, the Online Gaming Act now. What we can, in terms of now that the draft rules are out, it's open for feedback. What is the sort of flexibility that the MeitY has in terms of, let's say, in a situation where there are several concerns that are raised with respect to perhaps softening the rules in terms of the fines or in terms of the imprisonment terms? What is the sort of flexibility that the MeitY can afford?
I think as far as the main provisions in the main act are concerned, there is nothing that we can do now in the rules. Those are well considered provisions, and I do not think we've received any representations relating to the criminalization element or the fact that the penalties should be softened or any such. I think that has not been a request or demand that MeitY has seen so far. And in any case, that the rules cannot deal with. The rules basically deal far more with procedural matters and matters in the way that various parts of the implementation of the act is to be approached. So, and that is what it primarily deals with. And also the second bit that the rules deal with is that in the act, there's clarity on how an online money game is to be dealt with. But the Act also recognizes that there are other categories of games, online social games and esports. So there was a requirement for categorization of how that would be done. And that has been spelt out in the rules. How the categorization would be done, how the determination would be done, the process of the determination and the consequences of the determination. Very important, in my view, provision of the rules, which makes it easier for online, the gaming industry itself to flourish, not the online money gaming industry, but the broader gaming industry to flourish, is that the rules do not require an obligatory registration of online social games. There could be a large number of social games, and we know what they are. They are recreational, they are educational, they are not involved, and they are positive outcomes. There's good content which is created there. That is a segment of the industry which the government is keen to promote, and that was very clear even in the Act itself. So for that, the rules actually do not require online social games to necessarily register. That is basically an ease of doing business provision. So some new startup or a small venture which wants to set up an online social game, and it's not intended as a money game, they can go right ahead and do it without a registration. The registration of an online social game is voluntary, and the registration of an online esport, of course, is obligatory. But on an online social game, you don't necessarily have to register. Only if you want that there should be clarity that it is an online social game before it is being offered at large scale, you may choose to register it, and a determination is made. Of course, the authority will also have the power to actually look at online social games or any other online game which is being offered and examine whether it falls within the definition of an online social game or not, or whether it falls within the definition of an online money game. So that power is vested with the authority.
So once a platform is registered with the Online Gaming Authority of India, is that when they come under the purview, or without a registration they still...
Without a registration they can offer themselves. If they are sure that they are not an online money game, they can well offer themselves. I mean, somebody offering a game of Sudoku or a game of one of those, or a crossword game or something, I'm sure they can continue offering.
Voluntary registration for online games. Very interesting.
Online social games.
Online social games, right. So yet another and the last of the legislations is the AI governance framework that is also expected. Again, it's said to be a broad-based sort of a framework, though there are separate already existing laws that govern parts of artificial intelligence within the country. What is the aim, and when can we expect some sort of a framework with regards to a comprehensive AI governance?
I think the framework is, again, the committee which is dealing with this has met, and there's just the final dotting of the I's and the crossing of the T's, which is currently going on. It should be out fairly quickly. But I think more important than anything else is that it defines the approach that India intends to take towards AI governance. And the basic idea is that do not regulate or legislate when it is premature or not necessary. In the AI space, we are fundamentally looking at ways by which innovation can be promoted, and we will regulate or legislate only when it is necessary. So which then means that if there are existing laws which are governing the space and which seem to be adequate to address the issues, we will use the existing laws in whichever way that we can to make sure that those issues are addressed. If there is a necessity to either clarify a provision or to strengthen a provision or to make some provision clear, that will be done. So whether it is the IT Act itself, whether it is the BNS, whether it is the Data Protection Act or the Copyright Act, all of those provisions will be used.
Right. So moving on to a bit of hardware now, that's also something that this ministry has really promoted. And we heard from the minister a couple of days back on the ECMS, the Electronics Component Manufacturing Scheme, highly oversubscribed scheme as well. What is the sort of foreign interest that you've seen in that particular scheme? Apart from MSMEs, right, 60% you've seen a lot of interest from MSMEs. What is the sort of foreign flow coming in?
There are global companies also which have come in and they wanted to invest. We have seen a number of companies. There are Indian domestic companies, and there are, as you pointed out, MSMEs which are also domestic companies. So I think in terms of coverage, the coverage of the scheme has been wide. In terms of 249 companies distributed across the entire range of components that we wanted to address. So each of the sub-schemes has also been subscribed fairly, in a fairly substantial way. In addition, the nature of the companies also includes a wide range. There are Indian companies looking to scale up, which was part of the intent of the scheme. There are foreign companies coming in to invest either directly or through in partnership with Indian companies, which address specific areas where we did not already have the technology or where production was not taking place, like SMD passives and some of these areas. laminates, flexible PCBs and so on. So there are specific areas where that investment is coming in. Likewise, you see the component industry, because it involves, and especially things like capital goods and so on, and some of the module-based industries require other suppliers and vendors to come on board, and that is where MSMEs are playing a big role. So all of that is coming together quite well. So this is precisely what we were attempting to do, build the ecosystem. And the fact that there is a wide range of these companies and cross-section across the entire, whether you look at it by size or whether you look at it by sector, means that our goal is more or less in line to be achieved. The response that way has been extremely encouraging.
You mentioned about ecosystems. Another ecosystem that is being developed is the semiconductor ecosystem. And especially when we spoke on ISM 2.0, you said that it will be broader in terms of getting chemical suppliers, gas suppliers, other capital equipment manufacturers with regards to semiconductors as well. Could you give us some contour in terms of what we can expect from 2.0?
I think it has been made adequately clear, both when the Prime Minister spoke at Semicon and in various other speeches and statements made by the Minister. I think it's been made